Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal-making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never.
Ready? Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
No drama this morning. On the equity side of things, we're down about 0.1% on the S&P. On the Nasdaq, we're down by 0.2. In the bond market, setting the tone for things worldwide, Treasuries settled down just a touch. Across the curve on a 2-year, 10-year, 30-year, yields are lower by a basis point or two. We're down a single basis point on a 10-year to 467.29. On a 30-year, 490, getting closer and closer to that 5% line in the sand. Jim Reed of Deutsche Bank had a great line in a note that he put out to start the week, that the 30-year in the US has only been above 5% for 6 trading days. 6 trading days, and that was back in October 23 since 2007. So it's been pretty rare over the last 2 decades or so to have yields at or close to these levels.
And yet, here we are, and ultimately, if we get there, as a lot of guests who come on the show say that we will, test to me will be whether it gets bought. And yesterday, the signal from the bond market was that the 30-year got bought at these levels with a successful auction of $22 billion of notes. That was one thing that gave us support to this market. Does that continue as we get more details, particularly about the budget?
Let's pick out a market that's not getting much support. Let's look at what's happening with sterling right now. The pound is breaking down once again by 0.6%, 122.84. You can see this is playing out much more heavily for the sterling side of the trade compared to the euro, which is only softer by 0.2%. And this is happening even as the sell-off in gilts continues, up another 6 basis points on a 10-year. Lisa, approaching 490 for all the wrong reasons in the United Kingdom.
So yesterday, former Prime Minister Liz Truss sent a cease and desist letter to Sir Keir Starmer, saying that he needs to stop saying that she crashed the UK economy and saying that that is a libelous statement. And there is a real ultimate question here. Was it a Liz Truss moment, as we called what happened in 2022, and it was a much steeper sell-off in bonds and the pound, or was it a UK moment? This question of have they lost their clout on the global debt market stage, especially as they look to potentially increase taxes and cut spending in order to get a budget under control, and now it becomes maybe a Rachel Reeves moment, or maybe, just again, this is a moment that the country cannot avoid.
Yes. I think it'll evoke memories of 2022, but I'm with you. Speed, magnitude, completely different back in the 22 occasion, that scenario. I mean, we also had the overlay of the pension issues as well, and it's very different this time around. But I think you're right. This is becoming a UK issue. They're losing fiscal space. When you see yields up and a currency down, that's a very EM, emerging market type phenomenon. That's not something we're seeing play out here in America.
And Jordan Rochester made this point, and I think a lot of people are drawing parallels between the UK and the rest of the world. But there is a message here, and I think this is the reason why people keep bringing up the Liz Truss moment for the United States, and that is when interest rates start rising enough, that torpedoes your ability to balance your budget at home because that increases your base costs, and that is what the UK is facing, and that potentially...
It's a doom loop.
Yeah, exactly.
Just get worse and worse. You mentioned Jordan, top of the note. What was it? Great British Peso or something like that?
Yeah, then talking about other emerging markets. I'll pull it up to get it.
Brutal in the United Kingdom. Jordan, thanks for that. Under Savannah's this morning, a serious story. Los Angeles facing its worst natural disaster in decades as firefighters struggle to contain 5 wildfires burning across the region. The fire's leaving at least 5 people dead and forcing more than 100,000 residents to flee, with hurricane-strength winds expected to last through Thursday. Just brutal images coming out of that region.
The most devastating fire in the region, in LA, in history, potentially, at a time when there are real questions around, A, what could have been done to prevent this? B, how do you bring everyone to safety at a time where some people are saying, where was our plan? Why were we stuck in gridlock? And then a question going forward, how do you rebuild and ensure homes in areas that are prone to this type of fire, especially in a changing climate?
The blame game's already taking place. You're going to get the Democrats blaming Republicans for not taking climate change seriously, and I think the Republicans will make a very obvious counterpoint to that, which is you guys are in charge, do something about forest management, make sure you've got the water to begin with. I'm not sure the people who've lost their homes care. They want this fixed, and fixed pretty quickly.
They want it fixed when it comes to preventions going forward. They want it fixed when it comes to assurances that things can be done to mitigate this going forward. And they want assurance from their mayor that she's going to come back to the country and possibly come up with some sort of plan.
And not be in Ghana. Yeah, angry. I can imagine they are just angry, really angry with the leadership coming out of California and Los Angeles.
In the meantime, our hearts go out to them because this is just devastation. More than 100,000 people evacuated, watching their homes get destroyed without really being able to stop it.
We'll bring you updates throughout this morning. Certainly some bad news coming out of California, some good news potentially on the horizon elsewhere. US dock workers and their employers reaching a tentative labor deal. The new contract would avoid a shutdown of East and Gulf Coast ports next week if ratified. Bloomberg learning the agreement includes guaranteed union jobs when certain technologies are implemented and preserves the 62% pay raise agreed to back in October.
What's interesting to me is that this wasn't at the last minute. Normally, these kinds of deals happen right at the 10th hour, 12th hour, right before January 15th, when it was sort of set in stone. I wonder if this is a sign of a realization that you kind of have to take what you can get, and that the world is changing faster than maybe you can demand certain provisions to stay up to speed.
But if there are some people with some leverage, I would say it's the union workers at the docks right now. I think they've got some leverage, but I'm with you. The broader story, I think that the labour market and the employees are losing leverage to the employers. And we've seen that. I think we talked about it yesterday with JP Morgan, reportedly asking people to come back 5 days a week. Not typically what you'd see when the labour market is super, super tight.
Yeah, I wonder if this is sort of the beginning of an ongoing slew of union negotiations, or something you've mentioned in the past, sort of the last gasp before a different change that we have in the market.
Yeah, without a doubt. Let's turn to this story. I want to squeeze this in. The latest Fed minutes showing the central bank is looking to slow interest rate cuts in the months ahead. Officials citing higher inflation readings and strength in consumer spending. Fed officials also using placeholder assumptions for possible policy changes under the incoming Trump administration. When we closed out the show just yesterday, I said we're looking for a number. How many people? And I literally said a number.
Yeah.
How many people? And then they just wrote a number. Lisa, you said this too. I mean, super helpful yesterday in the Federal Reserve minutes.
You said we're looking for a number. They gave it to you. A number.
Yeah.
And that's basically what we're going to be stuck with. I do just wonder, they're kind of stuck between a rock and a hard place, in fairness. If they don't take into account any of the policies coming down the pike, that could be potentially irresponsible. If they do, that also could be potentially irresponsible if they make assumptions that could be viewed politically. How much is it sort of saying the quiet part out loud, that they are kind of considering what the market is considering, and that is going to be proven to be sort of a bad calculation?
It's basically what they're telling us, and if they're between a rock and a hard place, they put themselves there. They're victims of their own communication apparatus, and if they don't like them, they can change them, can't they?
What would that be, just to stay quiet?
Staff forecast, get rid of the dot plot, all of the above. We talked about this in the last couple of weeks.
Are you running?
Am I running?
Yes.
To be the Fed chair?
Yeah.
Nobody wants that. Let's turn to the Middle East. The Israeli military saying it has found the body of a hostage in Gaza, possibly alongside his son's remains. The discovery comes as Donald Trump's incoming team hopes to secure a ceasefire and hostage deal between Israel and Hamas ahead of his inauguration on January 20th. Let's head down to Washington, D.C., where Anne-Marie is sitting down with the former senior U.S. intelligence official, Norman Rule. Hey, Anne-Marie.
Hey, John, thanks so much. Yeah, what we're hearing right now from the incoming Trump administration, from Steve Witkoff, who went over to Doha to be a part and witness these negotiations and to really lend some support, is that they think that they can have good news to deliver. So, of course, we want to bring in Norm Rule, who spent decades at the CIA dealing with Middle East and conflicts. Norm, is it your understanding that potentially we could get a Gaza hostage agreement before President Biden leaves office?
Good morning. Yes, that is correct. The incoming Trump administration and outgoing Biden administration have been working very closely with no reports of any disagreements or frictions to achieve this. The statements by President Trump beginning in December that there would be all hell to pay if the hostages were not released injected new life into this issue. And both Hamas and the Israelis have claimed that they have made concessions to make this hostage deal, which would be the first phase of a longer deal, happen. This said, the phrase cautious optimism has been used repeatedly in the past. Hamas has not dropped its primary demand, which is that Israel end the war and withdraw. Israel has not dropped its primary demand, which is Hamas cannot be allowed to regain control over Gaza. So the exit strategy for this conflict continues to be tied to this hostage deal.
Norm, I'm in Washington, D.C. today because of the funeral of President Jimmy Carter. And like Jimmy Carter, President Biden, on his final days of office, is working to secure Americans abroad. Now, obviously, these hostages, I'm talking about the Iranian hostage crisis that Carter dealt with. The conflict, the crisis, very different in nature, but all roads lead back to Iran. Given your work and decades of experience dealing with Iran, what has changed from Jimmy Carter's presidency to now?
In some ways, the modus operandi of Iran and its proxies and hostage-taking remains identical. And in fact, there's another echo from 1979. During the Carter administration, the Algerians played a prominent role in engaging with the Iranians. Today, we have the Qatari government playing its large role in dealing with Hamas itself and sometimes the Iranians. So you do have strange echoes of this period. But since 1979, not only the Carter administration, but the Reagan administration in Lebanon and the United States repeatedly with Iran have dealt with a drumbeat of hostage-taking by Iran and its proxies. And these events tend to be multi-month, multi-year in many cases, where in the end, significant financial or political concessions are required to release hostages. Iran and its proxies have very little care for human life and dignity, but focus on their own interests.
Many observers would point to the peace agreement between Egypt and Israel that Carter was able to get over the finish line. How do you see that shaping the region?
It was dramatic and significant, but at the time it was not something that was a sure thing. The Carter administration entered office hoping to follow the steps of its predecessors, large international conferences involving the Soviet Union, the Geneva process. In fact, the Carter administration was not initially enthusiastic about Sadat's solo diplomatic engagement. The Washington Post at the time famously described the cool Carter reception as being so chilly it could freeze the Nile. But it did open for the first time the possibility of something that eventually, under the Trump administration, became the Abraham Accords. It's just things move slowly on these issues.
I'd love to end on that point because we do have an outgoing president who wanted to expand peace in the region, that Abraham Accords between Saudi Arabia and Israel. He wasn't able to finish it. And now we have an incoming Trump administration that certainly wants to make sure they're able to get that over the finish line. Do you see that doable in the next 4 years?
Yes. And in fact, the Biden administration also built on the previous Trump administration's work to pull together a Gulf security agreement with an important agreement with the government of Bahrain. And this agreement with Bahrain, which is a bilateral security agreement with the United States, now also includes the United Kingdom and is open to other partners. I think what we're going to see is perhaps not an expansion of the Abraham Accords, although that is possible. We may see economic integration. We may see greater an expansion of the Bahrain agreement. We may see a variety of different architectures, but if a two-state process can be established, I think it's inevitable that you're going to see this integration of the region, which would mean an expansion of the Abraham Accords and the peace process.
Norm, thank you so much. Jonathan, that was, of course, Norman Rule, a former U.S. intelligence official. One thing is very clear to me. This Iranian hostage crisis that engulfed the final year of Carter's administration, when you talk to people like Norm, not much has changed about Tehran and the Iranian regime.
He is one of the very best. Anne-Marie, appreciate your time. Look out for AMH a little bit later this morning. In about an hour from now, catching up with the former Speaker of the House, Kevin McCarthy. That will take place at about 7:45 Eastern Time. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. At least 5 massive wildfires are burning across Los Angeles. President Joe Biden has canceled a trip to Italy instead to focus on the federal response to the fires. And during a meeting in Germany, Defense Secretary Lloyd Austin said the Pentagon is ready to provide aircrafts to help extinguish the flames from the sky. Mexico's President Claudia Sheinbaum has countered President-elect Donald Trump's proposal to rename the Gulf of Mexico with a suggestion of her own. Sheinbaum said that large parts of the U.S. should be renamed Mexican America, saying the name has a nice sound to it. She noted that a large part of the western U.S., including Texas and California, had previously belonged to Mexico. Former Google CEO Eric Schmidt has invested in 3D-printed rocket maker Relativity Space. Sources told us that Schmidt has been backing the company since last year, helping it overcome fundraising challenges. The company is developing the Terran R rocket that is set to launch in 2026. It received a $4.2 billion valuation back in 2021. That's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the program, counting you down to payrolls.
What we're seeing is a frozen labor market, one in which we're not seeing much hiring, we're not seeing much quitting. A frozen labor market is unstable. Policy direction over the course of the next few months is going to be key in determining which side of the ledger the employment market falls.
That conversation up next, live from New York. You're watching Bloomberg TV.
You missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Stocks at the moment just a little bit softer. We're down by 0.2%. Check out the bond market, though. Back on September 18th, your 10-year yield, 364. Why September 18th? Because that is the same day that Chairman Powell cut interest rates 50 basis points. And since then, Elisa, yields are higher by more than 100 basis points.
And it has been relentless, and it has been an escalating move starting at the last month of last year. And this raises the question of how much is tied to policy, how much is tied to debt exhaustion, and how much is tied to an economy that really is showing inflationary pressures.
The next stop is the economic data under surveillance this morning. We're counting you down to payrolls.
What we're seeing is a frozen labor market, one in which we're not seeing much hiring, we're not seeing much quitting. A frozen labor market is unstable because we could either see a further deterioration in labor market growth, or we could see a resumption of stronger confidence. Policy direction over the course of the next few months is going to be key in determining which side of the ledger the employment market falls.
So here's the latest this morning. Traders bracing for tomorrow's payrolls report. The median estimate in our survey calling for 165,000 jobs added and unemployment to stay flat. Neela Richardson of ADP predicting a slowdown, writing the labour market downshifted to a more modest pace of growth in the final month of 24, with a slowdown in both hiring and pay gains. I'm pleased to say that Neela joins us now for more. Neela, good to see you. Happy New Year.
Happy New Year. Good to see you.
You put out your numbers yesterday.
That's right.
Where did you see weakness and where did you see some strength?
Well, we saw weakness in manufacturing, and this is, doubling down on a trend we've been seeing all year. 3 consecutive months of shedding jobs in manufacturing. That's very cyclical. On the strength side, we have to turn to a very non-cyclical sector, which is healthcare. Healthcare has been posting strong gains for the last 6 months. You see that in the ADP data. You also see that in the BLS data. It's what's really driving the jobs market now. And the question is it enough for 2025 for healthcare to be in the dominant position?
Are workers losing leverage against that backdrop? If you're seeing more narrow gains, if we're losing breadth and it's coming from areas outside of cyclical sectors in the economy, are we seeing a loss of leverage for workers more broadly? We've been talking about this over the past few days. JP Morgan saying, get back to work, get back to the office 5 days a week. We talked about it a little bit earlier this morning, that maybe that's why the unions on the docks are maybe settling a little bit earlier. What are you seeing around pay and signs of a loss of leverage?
We're seeing a lot, and I would align with those remarks that workers have lost some leverage from the heyday of the Great Resignation when they were clearly in the driver's seat. There is no one in the driver's seat right now. I think in the labor market, it's pretty calm and quiet. But what we're seeing is that pay growth has declined. We're looking at the lowest pay growth for job stayers since 2021. So that is significant. But also you have to look at hours worked, and that's where companies are kind of fine-tuning their labor count. Layoffs are very low. They're at historical lows for the past 2 years, but the number of hours people are working have been declining consistently over the past year and a half. That means that workers are making less. Also, I'll point to the JOLTS data that came out this week. Everyone made a big hubbub about the job openings. I went directly to the job quits, which are much lower. So people are staying put in their jobs, and that means there's been very little turnover in this labor market.
I agree with you. 1.9%, which is tied with the lowest rate for quits going back to 2020, and really raises some eyebrows about just how much mobility an agency and workers feel. I am wondering the why behind this. Is it because of policy uncertainty from companies? Is it because borrowing costs are higher and they're not making big expansionary moves? Or is it because they're still watching what's going on the artificial intelligence front with the potential that this will make some big changes to their workforce and they're not sure exactly how?
So let's take those pieces together. I think there is a bit of uncertainty about policies, but when you look at where the weakness is in terms of firm size, it's really been in small firms that we've seen the slowdown in hiring. Big firms are still hiring, and you see that clearly in the ADP data. So that points to more financing constraints than it does to AI investment or uncertainty about what, the next tariff policy will be. Most small firms don't operate in that macro scenario on a consistent basis when adding 1 or 2 employees. So when you're looking at that, interest rates matter in terms of financing costs for small firms. Longer term, over 2025, I think that AI investment and those trade-offs between capital and labor become much more relevant starting this year, but also into the future.
Are you saying that on the ground, from the bottom up, what you're seeing is that long and variable lags still do exist, and that they just got a lot longer, and that they still are restricting certain smaller companies?
They've gotten a lot more variable. Our lags.
Okay, all right, so they've gotten a lot more variable, and that's the reason why you are seeing it only in smaller businesses. But are you saying that rates staying here might look like they're not necessarily hampering financial conditions, but they are constraining the labor market in a more significant degree at this point than they did even 6 months ago?
Firms that rely on bank capital and small business loans are feeling the effects of higher interest rates. It may not be translating to the larger firms yet, but in terms of on the ground, the mom and pop, the Main Street businesses, I think you see that in their hiring decisions. And so yes, that is material because small firms are the engine of growth for the labor market and for the economy. And if you want that dynamism to continue, it really has to be at the small firm level.
So Nita, what's your reaction to the recent shift over at the Federal Reserve? What do you make of things?
The recent, well, there's been a couple shifts. I think what we're seeing in terms of the commentary around the Fed is that they have put out this idea of being more patient. And this is a Fed that we're not really used to seeing historically. Usually the Fed, when it's starting a policy change, it's moderate, predictable, modest moves every decision meeting. Now we're seeing a Fed that says, hey, we might take a break. We might, go on vacation for this one and do a rate cut at the next meeting. And I think that adds a little uncertainty to what the future path of interest rates will be.
And some of us might include some changes to policy that we might expect, and some of us might not. And that's been part of the confusion as well, Lisa, over the past month or so. How
does a market factor in what the Fed is going to be looking at when we don't have a sense of what policies and input data will potentially be going into their equation? It makes it rather confusing.
Does that make it more confusing for you, Neva?
For me, it's about the data, right? Some of this is just kind of animal spirits. It matters for the markets. It matters for the mood of making investment decisions. But does it matter for that HR director in a company who's trying to figure out how to grow a business in a particular area? Those policy changes are not going to hit that HR director in this month. It might play out over 6 months or a year, but they have to figure out the here and now in terms of the economic conditions that they're confronting with their customers, not what the Fed is doing.
It's increasingly complex, that's for sure. Nita, it's good to see you, as always. Thanks for dropping by. Nita Richardson there of ADP. Up next on the programme, we'll catch up with Jim Zauter of Apollo. Did not miss that. Jim in the building for 30 minutes. That kicks off in about 5 minutes from now. Then we'll speak to Alex De Silva of AccuWeather and the former House Speaker, Kevin McCarthy, catching up with Anne-Marie down in Washington, D.C. I think we've all got the question on top of our minds, Lisa, which is how big is that bill going to be and how quickly can you pass it?
And how much offsets are there? How many offsets to the potential deficit increase that a lot of people are expecting?
That's just around the corner, the second hour of Bloomberg Surveillance. Up next with equity futures on the S&P, just a little bit softer.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
You want to stick with the primary outperformance of the U.S., which we expect to continue.
If earnings are in double digits, we should have a positive year this year in the S&P.
We think the first half is going to be choppy. The second half of the year could be much, much better for equities.
We actually think that you are going to get the broadening this year. The deregulation backdrop that we're about to have in the incoming administration is profound.
These policies do matter quite a bit. That's why the market is moving so much on each of these headlines and will continue to move.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
It's one of those mornings, it's that time of the year where you sort of wake up and the first thing you look at is the gilt market. Waking up in New York City. You look at UK government bonds, apparently. Yields are up by a couple of basis points again, up by 3 in the UK. Levels we haven't seen since 2008 on a 10-year, 1998 on a 30-year. The 30-year this morning up by another 2 basis points. They've got problems over in the United Kingdom, not just of their own making. They've got problems from all over the world.
You mentioned Jordan Rochester earlier and how he's talking about how much UK is rhyming with an EM country in terms of the response in its debt market, its currency market. And you said something about the Great British Peso, which was his first thing that he said, and then Istanbul-on-Thames was the other one. And basically, this is sort of the sentiment right now. Have we broken the normal connection with developed markets and their ability to finance their deficits through the bond market?
We mentioned this in a previous hour. One thing that Jordan mentioned, really, to address the problems in the UK could come externally, at least one. They'd be praying for worse data out of the United States of America and a downside surprise on payrolls tomorrow morning. The estimate in our survey for payrolls tomorrow morning, 165, the previous number 227. You get a number north of 200K, you've got even bigger problems abroad.
This goes to the crux of the existential issue that's facing the rest of the world. The U.S. gets a cold, the rest of the world catches a flu, and it's even more relevant when the U.S. has a deficit that is the highest it has ever been on an absolute basis, when you talk about the fact that it is starting to be reflected in the bond market, and it's being carried over into other economies that are much weaker, that are not seeing the same growth. What happens if the U.S. has the same deficit, same yields, but not the growth? And that is the fear that a lot of people have.
We live in a tripolar world, and if you go through each of every one of the 3 regions right now, it's really a different backdrop. In the United States, growth is good, yields are up, and people think we're spending too much. In China, growth isn't great, yields are down, and people think the government isn't spending enough. And in Europe, they're stuck in between, getting the worst of all worlds. Growth is bad, yields are up, and people think they're spending too much. What do you do with that?
Well, you try to get a leader first, which is part of the problem because there isn't really a great deal of leadership in Europe. But this is the reason why, even though the prospect of ECB rate cuts is much greater than, say, Fed rate cuts, people aren't flocking to the sovereign debt market in Europe because the backdrop is so uncertain and they are stuck between the two poles that really are whipsawing them in different directions.
Anne-Marie not around the table with us this morning. You might have noticed Anne-Marie is down in Washington, D.C. to observe a day of mourning for the late President Jimmy Carter, the funeral taking place later on this morning. That will have implications for financial markets here in the United States. Just allow me to go through some times for you if you are just joining us. At 9:30 Eastern Time, equity futures will close. The cash equity market will not open today. For bonds, cash bonds, the Treasury market will close at 2 p.m. Eastern Time. So just some names, some numbers, some times to keep in mind a little bit later on this morning and into this afternoon. The next 60 minutes is going to shape up as follows. I can go through the timeline of events for you. In just a moment, we'll catch up with Jim Zelter of Apollo Asset Management on the outlook for private credit. Later on at about 7:30 Eastern Time, we'll speak to Alex De Silva of AccuWeather as devastating wildfires continue to threaten Los Angeles. And then Anne-Marie catching up with the former House Speaker Kevin McCarthy on President-elect Donald Trump's agenda. Do not miss that in just a moment. We begin this hour with stocks inching lower. Jim Zelter and the team over at Apollo Asset Management looking for opportunity outside of equities, saying, quote, if interest rates remain higher, as we expect, and the terminal Fed funds rate stays higher than where it has been historically, we see private credit as an attractive alternative to overvalued public equities. Jim joins us now for more. Jim, good morning and a very happy new year to you.
Good morning, Jonathan.
I'm going to kick off this conversation by stealing one of Lisa's questions to start 2025. Are stocks too rich or are bonds too cheap?
Well, I think we have a backdrop. I think your point about the U.S. and China and Europe and the three parties, it's our view that there's, and Torsten has been very consistent, the U.S. economy has been the beacon of opportunity in the last several years. Strong economic growth, capital coming in from around the globe. And so in terms of, I don't want to talk about the stock market, I'd rather talk about the underlying economy.
Sure.
Underlying economy looks like it's the place to invest. I don't think it's any surprise that when you peel the onion back, private capital, which has really been embraced in the U.S. and gives diversity of funding, lets companies grow, start, expand, and all the things we're talking about, the global renaissance, it's been the place to invest and it's been attracting capital. Contrast that to what's going on in the UK and continental Europe, where they are stuck in a financing system that's really 15, 20, 30 years behind the rest of what's going on in North America. It tells us that the U.S. is the place to invest.
So you think some of these problems in Europe might be more structural in nature? I
think structural is really the key to really analysis. It's very easy to focus on the last 3 to 6 months. We talk about the Liz Truss moment in the UK. I think it is a great reminder for this current administration as they've got great ambitions in terms of U.S. investment, CapEx, tariffs, immigration, a variety of other big initiatives. It's good for this reminder of the Liz Truss moment in the back of their minds to know what can happen if you lose confidence. But there's no doubt, I think, if you look at what the Draghi document did, later last fall, he pointed out in 158 summary pages of all the challenges that they have not really embraced. And while the banks are in better shape than they've been in a couple of decades in Europe, the U.S. is the standout. We have the greatest financial services sector in the world. We have the deepest, broadest capital markets. We've undergone a tremendous amount of regulations on our banks, and they've continued to thrive in a more narrow world. And that's the page that the Europeans should be looking at, embracing securitization, embracing private capital. They've got a massive amount of infrastructure needs, and they should be embracing that for their long-term economic success.
In the meantime, people are saying that maybe the ghost of Liz Truss is kind of hovering over this administration and hovering over the U.S. Treasury market right now, especially given the rise that we've seen in longer-term yields. And I'm wondering how susceptible you are to changing your view on how constructive the U.S. economy is if you get some more negative data prints. We had Greg Dako yesterday talking about a frozen job market. We had Neela Richardson talking about how smaller companies really are feeling rates where they are.
Rates have been higher for the last 12 to 18 months. They've been higher. Obviously, we're in a period right now where what the Fed did in its actions in the fall and what the market has responded to is a very unique period. So you're right, we are in a little bit of a unique zone here with regard to macro and rates in the U.S. You know, I do think we are in a period where rates do look attractive versus where equities are, and we're in a period right now where we're still the place of economic growth, but it is a warning sign for the administration about how much they can push. Now, clearly, the other side of the trade, I would not probably be lowering rates right now. I think that you have full employment, economy's doing quite well. I'm not sure I see a need other than economic textbook to lower rates in terms of the target, but it does create a lot of room for the new administration if they have weakness in any kind of the economy because of their initiatives. The Fed put us back, they have a lot of room to move.
Your colleague is sort of edifying your points as you say them, Torsten Slok, moments ago. Inflation reaccelerating, to your point about not necessarily needing to lower rates further. You talk about credit being the sweet spot and debt, maybe even over equities, and that has been the story over a long period of time, this past couple of years. If inflation could be reaccelerating, could you see that story changing at a certain point?
Yes, you could, and I guess, listen, there's a lot of consensus out there about where the S&P is going to go, where rates are going, but in our view, in the backdrop, the U.S. economy is still the strength of the globe. It's the beacon of economic opportunity. We still have a lot of economic growth in terms of the industrial renaissance that we've been talking about. So, in our view, the breadth of credit, investment grade as well as non-investment grade, we try to find areas of dislocation or areas of mismatch of capital and opportunity, and we're still seeing it in credit versus the equity markets. Now, when you look at the S&P 500, I would say that it's interesting. We all know what the Magnificent Seven are, but certainly the other 493, a lot of unloved opportunities in that basket. And there's probably an opportunity in a non-consensus view in terms of those companies, in terms of just pure economic growth. But we are still, listen, private credit and private capital has been the engine of economic growth in the U.S. And I will, again, I said earlier, it's not a great irony. It's a great irony that the U.S. has been the bastion of economic growth with the embracing of private capital. But, one of the greatest investors in U.S. capital history, Warren Buffett and Berkshire, when you really pull the covers back on Berkshire Hathaway, of the $1 trillion of assets at the end of 23, 30% are in the public equities that we know about, Apple, Coca-Cola, American Express, B of A, but 70% are private companies. It's the growth engine. He's the greatest capitalist. He's been doing it for 50 years. That's where growth and opportunity is in America. Private capital in private companies. And they have access in the debt markets. They don't need to go public to raise capital anymore. 8,000 public companies to 4,000. That's the trend in the future. And we're sitting really at an intersection trying to bring those opportunities to the broad group of investors, retirees, and savers around the globe.
So you mentioned Europe, and Europe, certainly, the bank channel is overburdened. We've been talking about this for years, the Europeans have. Draghi talked about trying to do something with public markets in the same way we have here in the United States. It's not happening. I want to understand from your perspective how you will work with the banks in America going forward from here, because there's a start of a new trend where the banks will originate the loans and then you'll provide the money. How's that going to work in years to come? How big could that opportunity be?
Oh, I think 24 was a pivot year. For us as a leading firm in this industry and in this sector, there was a great headline, and you and I talked about, the three of us have talked about on this show many times, where the great battle between private capital and banks. The reality is, if you look at the commercial dialogue going on between the top 5, top 10 institutions and the handful of us that lead our industry, the amount of integration, dialogue, working together on big deals has never been deeper. Obviously, there was our Citibank transaction, our Citigroup transaction. There was a transaction we did with Standard Chartered, BNP. And so I think we're still at the early days. These partnerships need to have substance. They can't be, excuse the phrase, shotgun marriages. They have to be ones that really have substance, dialogue, trust, and some history of doing a lot of transactions together. We've been fortunate in all the ones we've put together where there has been a lot of either history of personnel or of activity. But I think still it's early days, early innings. Now, there's a lot of headlines just to grab headlines, and there's not a lot of substance behind them. But I think that trend of private capital and bank partnerships is going to extend in 25 and 26. And I do think, if you think about the economic backdrop, I do sense that there is a great opportunity for strategic M&A. That clearly feels like it's going to happen. I'm a little bit more skeptical about the massive IPO window. If you look at the last 10 years, equity issuance has been about 250 billion, 50 billion IPOs, 200 billion secondaries. That's removing all the SPAC numbers. I think you still have a valuation issue with a lot of private equity companies that want to come out and do their IPO. And so I think we have a consensus view or non-consensus view at Apollo that that number is going to be not as large as people think. And so the big mismatch, if you have a big credit market, a big equity market, this area of hybrid in between, which we've been talking a lot about, applying capital to those over-levered companies, that's the opportunity of 25 and 26.
Just to build on the IPO issue just a little bit more, is that just a valuation issue, or do you think it's a role that you have to play here, that these companies don't need to go public anymore?
It's a combination of both. It's a great question. I think it is a valuation issue for probably 50 to 60% of them. I think it's very, very clear now private companies have access to all sorts of capital, debt and equity, preferred, convertible, whatever it may be. And so the typical route where you needed to go to have your employees be able to monetize their investments, broad-based capital, equity, revolvers. You saw what OpenAI did several months ago, bringing in a bank facility. There's tremendous pools of capital, private capital, that can fund and finance these companies. So going public is by no means the ticket to liquidity that you needed in the past. A lot more options.
In 5 to 10 years, will there be a difference between public and private markets?
We don't believe so. I think there will be some differentiations, and I think the question that gets raised right after that question that you ask is, well, is there going to be a massive compression in yields? And the advantage is going to go to those folks that have the bigger, you're going to make money on the origination. The ability to make the $3, $5, $7, $10 billion commitment to XYZ company, that's where you're going to garner the extra spread. But all the things that we're doing in origination, in capital formation, in trying to bring some liquidity to these markets in terms of secondary activity with transparency and price discovery, I think the barriers and what's private is risky and what's public is safe. I think those barriers will be coming down. And again, I go back to this Berkshire. No one really talks about it, but it is quite an irony that the greatest public investor of all time, 70% of those companies, when you look at the web page, these are some great American companies. And over 50 years, he's assembled them, and they're massive compounders. And that's 70% of the underlying value. Geico being at the top, Clayton Homes, BNSF, many, many other great companies. And I think that's a lesson for us all. There's companies that are private, and there's private equity. You should differentiate between the two. But we clearly want to be part of that big trend and offer those to investors and retirees around the globe. It's a big change in market structure.
You're going to be sticking with us to talk about that change in market structure and the changes we could be seeing in Washington, D.C. a little bit later this year. Jim Zauter there of Apollo Asset Management. Let's give an update on stories elsewhere just briefly. Here is your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. More than 100,000 Los Angeles residents have fled their homes as at least 5 massive wildfires burned across the region. It's the worst natural disaster in the city in decades. AccuWeather estimates that the fire will cause $52 to $57 billion in damage, making it likely the nation's most expensive wildfire. Apple, meanwhile, says that it never used data from Siri to build marketing profiles and that it didn't sell that information to anyone for any purpose. This statement comes after Apple agreed to pay $95 million to settle a class action lawsuit alleging that user privacy was violated when human reviewers listened to Siri recordings. Apple says that contractors listened to recordings only to improve Siri's voice recognition, and recordings are only retained if users explicitly opt in. And in English football, some big upsets. Tottenham edged out Liverpool in a 1-0 match in the opening leg of the semifinals at the EFL Carabao Cup. 18-year-old Spurs midfielder Lucas Bergvall scored the winning goal in the 86th minute. The match follows another upset, Newcastle's win over Arsenal in their semi-final match earlier this week. Arsenal coach Mikel Arteta complained of the quality of the balls being used in the tournament. Both teams will face off in the second leg of the semi-final in early Feb. And that's your brief. John.
Hey, Danny, thank you. Who put Tottenham in a brief? Who did that? Up next on the programme, cutting the red tape.
Any business that invests $1 billion or more in the United States will be eligible for fully expedited permits and approvals, including environmental approvals from the federal governments.
That conversation up next, live from New York City. This is Bloomberg. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything.
Equity futures on the S&P 500 negative by close to 0.2%. If you check out the bond market, stabilizing a touch. We're down 2 basis points, call it down close to 3 on a 10-year, 466. Over in the United Kingdom, things stabilizing just a little bit. I won't get too excited. Yours are still higher by 3 basis points. The 10-year over there, 482. And the surveillance this morning, cutting the red tape.
Any business that invests $1 billion or more in the United States will be eligible for fully expedited permits and approvals, including environmental approvals from the federal governments. They took away 625 million acres of offshore drilling. Nobody else does that. We're going to be drilling soon. We're going to be opening up Anwar. We're going to be doing all sorts of things that nobody ever thought was even possible.
So here's the latest this morning. President-elect Donald Trump pledging to draw global investment to the United States, slashing permits and approvals for investments of $1 billion or more. Trump also vowing to overhaul the nation's energy sector by opening more space for offshore oil and gas drilling. Jim Zauter of Apollo is back with us. Jim, I've got to ask you this, and we can move on quickly if you want to. How close were we to losing Mark Rowan to the swamp down in Washington, D.C.? How close did we come?
Well, I think that the administration saw an amazingly bold thinker and who would have had a huge impact on the future trajectory of our economy and our the far-ranging responsibilities of the Treasury Secretary. And I think he was, very engaged in the process. But America's loss is Apollo's gain, and we certainly feel we have a great, deep management team that could carry the water in his absence, but he was very engaged in the process.
Let's build on your gain, and that's diplomatically put. In early November, when we got this election outcome, your stock was like a rocket. what were investors seeing? What do you see as an opportunity of the incoming administration? What kind of changes are you expecting that might benefit your business?
Well, I think they've seen, in our particular example, we've been a company that has grown over the last decade by being at this intersection between retirees and investors around the globe and companies needing to raise capital. And as the markets have evolved, we've continued in a low-rate environment and a high-rate environment. We've been able to continually, 15 to 20% growth of our business every year. And they see that in an environment where we're going from an administration that was clearly not pro-business and not as pro-growth to one that clearly is pro-growth, a regulatory environment that clearly has changed. So I think the view has been, if these folks have succeeded so well in an environment where there's been an administration that was not cheering them on to one that's clearly cheering them on, that's a better backdrop of a broader success. And I think that's what we're seeing right now. Certainly the refreshed view of a regulatory backdrop, this refreshed view of M&A, the refreshed view of bringing capital into the United States and having capital really provide a lot of this growth, whether it's in technology, whether it's in the onshoring of companies. We're feeling the backdraft of that, which I think is very, very positive.
Well, I want to pick up on that, the idea of financing some of the technological advancements. We've heard a lot about that, whether it's some of the warehouses, whether it's some of the energy grid. What areas is Apollo going to double down on as a result of maybe more free permitting, more acceptance, and frankly, some of the sentiment that you were talking about?
I think you've identified them. Certainly when you look at the big TAMs of infrastructure, of data centers, of the utility grid, of that broad infrastructure, all of those by many, many investment-grade companies, even the highest-rated investment-grade companies. Witness what we did last year with Intel. There's a whole slew of those that are looking at massive CapEx needs, and we've talked about it here in the past. As much as the investment-grade market is a very robust, open market, a lot of the growth that these companies are confronted with are well in excess of what can be financed purely with the investment-grade market with their existing ratings. So you've identified 4 or 5, and they're really in those big pools of economic growth of infrastructure, technology, digital, data, all of those areas, which many U.S. companies, as well as the onshoring of foreign companies coming to the U.S., wondering how they're going to finance these activities. So, as I said before, since the Intel transaction, we have been incredibly busy. I would argue, I've used the term phone ringing off the hook, about the dialogues we've been in with a variety of these investment-grade companies looking to finance their business in a variety of manners.
And certainly there's a belief that the incoming administration, Lisa, is going to have a more pragmatic approach to the energy needs that are going to be required to support some of these shifts. That's for sure.
With respect to drill, baby, drill, there has to be a host, though, of different energy provisions, and that's one thing that we keep hearing. Key question for a lot of people is how consistent can some of the regulatory parameters be, and that's why some of these connections are for many years in terms of the investments and some of the big tech companies that are making some of the financing.
Well, also, these are long-duration investments, and again, this is another theme that really came to the surface last year in terms of what the market has really embraced is the duration of the capital that we have with our annuity and retirees that many of our peers have as well, but the scale and the integrated manner that we've brought that to the forefront, I think that's what the market has embraced.
Jim, you're one of the best. We appreciate your time.
Thank you.
Thank you, sir. Jim Zauter there of Apollo Asset Management. Up next, Alex De Silva of AccuWeather as devastating wildfires continue to threaten Los Angeles.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Equity futures at the moment pulling back by 0.25% on the S&P. We're down by about a third on the Nasdaq 100. On the Russell, would you believe it? The Russell is basically flat since the election. After that massive month of gains in November, we took almost all of it back in December and some to kick off 25. It's kind of amazing, isn't it?
It is amazing until you see the buzzkill, which is bond yields, and then you say, wait a second, this is exactly what some people warned, that the stock market would like some of the proposals, the bond market wouldn't, and oh yeah, the bond market might be in the driver's seat.
Fireworks in the global bond market. Let's get you some of those fireworks right now with Bloomberg's Manus Cranny. Morning, Manus.
Jonathan, Lisa, good morning. You're right. The depth charge that started in the United States was a debate about term premium, not about inflation. It was a debate about the trajectory of the Fed. We've broken trend, so yields are down by 3 basis points. This is a bear raid, not vigilanteism. That has got to be put in context. We've sort of broken higher, but not to the extent that you saw in 1994, where bond yields exploded by 5%. So it erupted here, and the triage is for the rest of the world. And what do I mean by that? We're going to begin to discover who really is swimming naked when the tide goes out, fiscally speaking. And this is where the disruption is in the United Kingdom. Levels that you haven't seen since 2008. Again, put in context. People are talking about a Liz Truss moment. This is not a Liz Truss moment in the bond market yet. In 2022, the bond market erupted by 100 basis points over the period of a couple of days. This is 30 basis points in the space of a week. But what we have here is, how do you constrain this? And I like what you said earlier from Jordan Rochester's note. I mean, people in the brokerage community are saying the great British peso and the Istanbul on terms. The question is, fiscally, what happens in the United Kingdom? And when you have Martin Wheel, ex-Bank of England, talking about 1976. 1976 is when the UK went to the IMF for a bailout. That's not what people are calling for, but Martin Wheel is writing about it. So how do we stop the run? Have a look at the US bond market. One big, beautiful bill. That is the narrative, that is the mantra from the Biden administration and from President-elect himself. The question is, what triggers a real dislocation in this bond market? Is it additional tax cuts above $5 trillion? The real yield is the important thing here, Jonathan, and what you're seeing is a mini bear raid in the US, morphing into a global dislocation. But this is a lesson for this US bond market, that if you push the fiscal envelope too hard and too fast and too aggressive, the whipsaw can be pretty monumental. 1994, go check.
Manus Cranny, you lived it. Appreciate the update. Thank you very much, sir. Looking forward to payrolls tomorrow morning. 165,000 is the estimate in our survey. The previous number is 227. There's been a few occasions over the last 12 months where we've said good evening Tokyo, because we believe that Japanese authorities are following the economic data so closely given what was happening to dollar yen. I think we've got to say good afternoon London tomorrow morning when we get those numbers, right? That's going to be a big issue for the UK.
Even more so than good afternoon Tokyo, because Tokyo is doing just fine with some of the wage increases that they've seen. It really is now about the United Kingdom and frankly about Europe that's feeling some of the pressure from higher yields globally that are impacting markets that don't have the same amount of growth.
Under surveillance this morning, gilts extending a fourth day of losses on concerns the UK's Labour government will struggle to keep the deficit in check. Some investors drawing comparisons to both the 22 gilt crisis and the 76 debt crisis when the UK government asked the IMF for a bailout. The pound also falling to a multi-year low. Pound sterling, Lisa, 122.78.
This is important. Essentially, what this shows is that as yields go up, fewer people want to come in, and that is going to be really the hallmark of the Great British Peso, as we just heard about from Jordan Rochester, that was mentioned by Manis. This is really the concern. How much is this becoming an emerging market type of behavior that really does make it difficult for this administration to alter the ship?
Well, let's talk about that administration. They've got internal problems and external problems. The internal issues, spending too much money. One, on the monetary policy side, QT, probably not the best time for QT. Let's see what happens there. Then there are external issues. They're importing weak growth from Europe. That weak growth is being imported from China. And then you've got what's happening with global markets, driven by the United States, which is the point that Manis was making. The external issues are much, much harder to address. Growth's not going to pick up anytime soon on the continent. It's basically flatlining to worse in certain regions. And in the United States, this administration is hell-bent on making sure that we live in a high nominal growth world in the United States of America. And so long as that's true, there's going to be pressure on bond yields upwards, and that's going to be exported to the rest of the world, and we're seeing that play out in the gilt market.
There's one feature in this scenario that you paint very well that's interesting to me, which is that in the UK, they're trying to raise taxes to pay for some of what they're doing. In the US, the goal is to cut taxes to juice growth. That divergence right now is benefiting the US at the behest of the likes of the United Kingdom, and I'm curious about the history books of how that gets written.
It's a real crowding gout. It's been a theme of this program for the past few weeks. There's a real crowding gout taking place. Let's keep it here in the United States. President Biden planning an additional round of restrictions on AI chip exports. Sources telling us here at Bloomberg that Biden is looking to curb the sale of AI chips, including from sector giant NVIDIA, on both a country and company basis, focusing on development in friendly nations.
So there are a lot of questions here, not least of which is how much this is actually going to remain in place through the Trump administration. But it remains this issue of where is it okay for U.S. technology to be implemented outside of the U.S.?
What's a friendly nation?
What is a friendly nation?
Is Japan a friendly nation?
Exactly. And this becomes the heart of the issue. If basically it's not just NVIDIA. This is a matter of Google or Microsoft creating a data center in another country, because that also is within one company exporting those chips in order to create that center. So how narrow is our group of allies, and what was the goal of this particular credo at the twilight of his term?
The Biden administration having a very busy close in the last few days, that's for sure. The president also cancelling a planned trip to Rome as wildfires continue to threaten Los Angeles and surrounding areas. The White House saying the president is staying in the United States to, quote, remain focused on directing a full federal response in the days ahead.
Well, and this is probably more on par with the tone right now than, say, the mayor of Los Angeles, who I believe is still not in the United States, is still in Ghana. But there's this question here about how you prevent this from going forward, and then how you tackle this in real time when they're running out of water. I mean, it's an absolute catastrophe, and it raises a lot of questions structurally about how you prevent this, how you redevelop, and frankly, how you insure properties where a lot of them had stopped being insured because the insurance companies couldn't raise the premia. So they just got out of California altogether. It creates this real mess.
A victim of their own regulations.
Well, we can call it whatever we want. We're going to be dealing with the aftermath for quite a while.
Difficult to track the mayor, but I believe the mayor is back. But I think I think the issue that the mayor has got is the issue that the president of the United States has got as well. Let's be honest. I'm not sure how much the president of the United States is actually doing right now to help out on this situation. But if he was in Italy, he'd be criticized. That's for sure.
So it's a public relations thing, sure. He's not out there fighting the fire personally, but a lot of this is an important tone. You need to show, if you've got 100,000 people who have been evacuated from their homes and more, and there are hundreds of homes that are being demolished, I mean, a joyride?
Let's keep it on the wildfires. Those wildfires forcing more than 100,000 residents to flee the area's worst natural disaster in decades. AccuWeather estimating the total economic damage will be between 52 and 57 billion US dollars. Joining us now is Alex Da Silva of AccuWeather. Alex, thank you for joining the program. What's the latest this morning?
Yeah, we still have 3 major fires burning on the north side of Los Angeles right now, all of them less than 10% containment right now. There's even a few fires that have popped up around the area as well. Those are much smaller and do have, fortunately, some containment. But again, those 3 major fires, the Palisades, the Hearst, and the Eaton fire, all 10% or less containment. Now, let's take a look at the winds. What are they doing? Because that is the major question. Are these fires going to get worse? I have some good news. The winds did back down considerably last night, but it does look like they're going to pick up a little bit today into tonight. So we're looking at winds of 30 to 50 miles per hour. The good news is that's down from the 70 to 90 miles per hour that we've been dealing with over the last day or so. But again, still going to be windy across the Los Angeles area. I do think that these fires are going to continue to make some progress. But again, the winds have come down a little bit, so the firefighters should be able to make at least a little bit of progress as we go throughout the day today. Like you just mentioned, AccuWeather estimating $52 to $57 billion in economic damage from these wildfires. It's not just the physical damage, it's the tourism damage. And it's a lot of those repercussions that kind of come after the event. So it's not just about what's going on currently, it is how are these going to impact the future? And so that's all baked into this estimate of $52 to $57 billion in damage. The question is, how does this compare to other natural disasters? On top, you see the $52 to $57 billion in the California wildfires. In the 2020 wildfire season, many of us remember that. That was such a destructive season. That was $130 to $150 billion, but that was over the course of the entire wildfire season. This is almost half of that, and it is in just a couple of days. And then you can see how it compares to Hurricane Helene with over $200 billion in damage.
Do we have a sense, Alex, of who's going to be paying for some of these damages?
Yeah, I'm not sure. I think the federal government is probably going to be aiding in some of these repairs that are going to have to be made. But like I said, the damage is not done yet. It looks like that some of these wildfires are going to continue to spread. So, certainly a disaster declaration will have to be declared probably in this area, and federal money will have to come in, I think, to the Los Angeles area.
Alex, appreciate your time this morning. No doubt we'll catch you up with you before the weekend. Alex De Silva there of AccuWeather on the latest in Los Angeles. With an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. First, the latest in the battle to stop those wildfires. The U.S. military is ready to help. Defense Secretary Lloyd Austin said the Pentagon will provide aircrafts to help extinguish the flames from the sky. At least 5 massive wildfires are burning across Los Angeles, as we were just hearing. 27,000 acres have been scorched, 5 people have been killed, and 100,000 have been forced to flee from their homes. A union representing U.S. dock workers has reached a tentative deal with port operators for a new 6-year contract that avoids a strike. Bloomberg has learned that the agreement guarantees union jobs when certain technologies are implemented. That includes the semi-automated cranes that had been a sticking point. The deal still needs to be ratified by the two sides. Hershey is asking the U.S. government for permission to buy huge amounts of cocoa. Concerns surrounding the global shortages of the commodity have soared, and record high prices expected to persist for a 4th straight year. Hershey is seeking to purchase over 90,000 metric tons of cocoa. That exceeds the U.S. Commodity Futures Trading Commission's limit. And that's your brief. John.
Danny, thank you. I'm surprised there's actually that much cocoa in Hershey's.
Oh, really? You're going to go there?
I'm just saying I'm surprised.
I was just going to say that explains why I couldn't get my bushels.
How much chocolate is actually in the chocolate?
Okay, I know,
We'll talk about this another time,
all right. How do you eat our chocolate?
Love chocolate.
Do you actually look at the percentage?
Yeah.
Of course you do. And you only do above 70%, right?
60% enough.
60% enough is okay?
Like that,
you can do that.
That's too high, I sneeze. Got an allergy in there somewhere. Up next. Seriously. Donald Trump's agenda turning into reality.
Given our small margin in the House, we're going to need everybody's vote and everybody on board. Our Senate and House Republican majorities are going to have to work together.
Seriously, I don't know what it's about. Anyway, down in Washington, up next on the program, we'll catch up with the former Speaker of the House, Kevin McCarthy, sitting down with Anne-Marie.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Equity futures on the S&P 500 negative here by 0.2%. Call it down by 0.3, a quarter of 1%. Yield to number 2, that's helpful. We're down 4 basis points, the 10-year 4.65. Under surveillance this morning, Donald Trump's agenda turning into reality.
Given our small margin in the House, we're going to need everybody's vote and everybody on board. Ultimately, our Senate and House Republican majorities are going to have to work together. Nobody's going to get everything they want out of this. There's going to have to be a good faith negotiation if we have any chance of passing a reconciliation bill.
So here's the latest. President-elect Donald Trump is back on Capitol Hill discussing his priorities with Senate Republicans and telling reporters whether it's one bill or two, there will be results. Anne-Marie joins us now down in Washington with the former House Speaker, Kevin McCarthy. Anne-Marie.
Good morning, Jonathan. Well, I love what Majority Leader John Thune said. It's clear as mud in terms of the sequencing, but the priorities are clear for President-elect Trump in order to get his agenda through. And we're going to talk about that right now with former Speaker of the House, Kevin McCarthy. You know how challenging it is with slim majorities to get anything done in Congress. What's your advice to President Trump? Does he go for this one big, beautiful bill, or does he lean on the Senate, who wants to see a two-track approach?
I think one bill is the right answer, and this is why. You've got to understand for you.
But is it big?
Well, this is the point. It's different, okay? This is the first time in modern history the majority in the Senate is larger than the House. So the Senate's going to have a different view. They've got 53, but they really have 54 by having the vice president. The House even has a smaller majority than it had in the last Congress. They lost seats while everybody else won. Plus, come January 20th, they're going to lose 2 more members for a time period. Those 2 Florida seats won't get filled till April 1st, and then the New York seat won't get filled till after that. So you can't take that many bites of the apple. And remember for your viewers why you're doing reconciliation. It's a special provision that allows you, if your party controls the Senate and the House, to pass in the Senate without 60 votes. But you can't write a perfect bill. So this is how the Democrats did Obamacare. It's how we did tax reform. You've got tax reform you have to get done by the end of the year. Otherwise, your taxes all go up. So the pressure is on you. If you make the bill too big and too beautiful, most in history, it collapses upon itself because it's too big. The reason why they're looking at 2 different bills, they need money now for the border. But I believe the border is a disaster. Declare it a disaster. Pull money from the disaster fund. You're going to be putting more in for Californians and let you do the border right now because tax will take a little longer. The other problem they have, though, is they made a mistake. They never finished the funding from last year, and this is a disadvantage for Trump. They hurt Trump by making him worry about last year's funding now, which is due in March.
Was that a fault of Speaker Johnson?
I don't know whose fault it is, but they should have got the job done, okay? And they should have done the debt ceiling already. So these are two provisions that the Democrats could use to an advantage and slow down your agenda. So the first thing I would do, you still have time now, finish the funding from last year and take care of the debt ceiling so President Trump could have the honeymoon or the agenda he wants to start putting forward. Because we're now they got to confirm in the Senate the new cabinet. He's got to get his people in line to start working. But President Trump knows this job already. He knows he's got 4 years. He's not going to waste one moment. He'll do tremendous on the executive orders, but he needs the legislative body to catch up to him.
Who's going to be that moderating voice to make sure that it's not too big so that it doesn't actually collapse?
Well, it's what I love. It's the free market. It's a natural that you'll see.
So you think it's this bond market? We've seen yields go up. People starting to be very
that's going to be on the debt.
Financial discipline. Do you think the bond market does Congress have room to spend as much as Trump's rhetoric is talking about?
Well, the problem is Trump's just now coming in. It's like I'm taking over a company. And remember what the debt ceiling is. You've got to give him leeway. So all it says is paying the debt that the last people had spent. But the debt ceiling doesn't solve all these problems.
The market right now is pricing in his future plans and spending. Will that be the moderating force?
You're not counting in Doge, okay? And what I look to Doge, I think this is good because it gives people the opportunity. But the way to handle this, and I tried to get Biden to go for this, in 1989, the Soviet Union collapsed. And so we needed to reform our military, all designed to fight the Soviet Union. But what member was going to raise their hand and said, close my military base? Nobody, but you need to. So you created a commission, but this was the important part. You had teeth to it. If they got their work done, it got a vote in the House and the Senate with no amendments. And lo and behold, it passed. They need to do something like that for Doge. When Doge gets their work done, let them vote in the House and the Senate with no amendments, and you'll know whether you can get it. I think one of our greatest threat is our debt, okay? But we've got to do a lot of things going forward. The debt ceiling is not a part of that. You should take that out of the way, let the president be able to govern, do the job that has to be done.
Are you feeling that this can potentially be done, though, in April, what Speaker Johnson's talking about? All of this? New spending, reconciliation, and a disaster?
Well, I think it's hard to say by April 1st because you haven't put every vote matters. I'd wait till the Florida seats because that's 2 more seats. You can't get tax done that fast because remember, tax, they're going to do something about salt. They're going to do something about tax on tips. That costs money, so how are you going to pay for it? But you've got to start working on the border, so take that money from disaster and do the executive orders. Get that done. You want to do something on energy. But if you put the debt ceiling to reconciliation...
Which is what people are talking about.
That won't work. And this is why. Because there are members in the Republican Party that will never vote for it. And you have no votes to spare.
The House Freedom Caucus.
Yeah. So you should...
Who wins that fight, Trump or the House Freedom Caucus?
Well, no. Trump will always win. House Freedom Caucus loses from that perspective because the House Freedom Caucus is then saying to the American public, your taxes are going to go up. And you know, you've watched in the House Freedom Caucus, their former chairman was anti-Trump. They have anti-Trump people in that caucus, and it's unfortunate. So nobody can fight here. They've got to focus on priorities, but they've got to focus on the policy. You're not going to get it 100% right, but government isn't designed that way, right? You've got to have confidence because you've got to deal with the Senate. But you'll get this done. It's in the sequencing of how you do it.
I also want to ask you mentioned California and the disaster at the top. How do you think Trump is going to deal with when he's inaugurated and the incoming tragedy, devastating fires that are apocalyptic, people not having their homes, not having enough water, not having enough firefighters? How is he going to work with Democratic Governor Gavin Newsom to solve this crisis?
There's a third point, too. A lot of these families lost their insurance in the last 6 months because of Gavin Newsom's inability to deal with this problem.
You know, the insurance companies wanted to raise the rates.
They wanted to be able to make sure they can afford to insure. When he wouldn't focus on that issue, they have left the state. My mother lost her homeowner insurance from Geico, and she had no claims because California was uninsurable, and they ignored the problem. He gallivanted around. You know the saddest part about all of this? We've had these fires before. I went out to California with then President Trump, November 17th, 2018. We just had Paradise, where 85 people died. And we toured that with Gavin Newsom, who had been elected governor, not sworn in, and Jerry Brown. And then we flew down to Malibu that had a fire as well. I was in the meeting walking these places where President Trump is saying, you got to take the fuel away. Yeah, you're going to get a fire when there's wind and push it, but if it doesn't have fuel, it can't keep growing. The other problem, too, is had you worked on the evacuation ahead of time, instead of these cars getting stopped and people, that's what happened in Paradise. What about the infrastructure? You can't go to a fire hydrant and not have water. And President Trump worked on providing the water further, and you know who fought him on it? Gavin Newsom.
But looking ahead, Trump is going to come in and want to make sure that California gets the money they need.
I think you're going to see Trump will be there for California. But what Trump's going to do, too, is you can't keep repeating the same mistake. I think you're going to see executive orders pretty early about the water again. The President Trump did that last time. Had Gavin followed through, we would have had water. President Trump was very serious about making sure taking out that fuel, protecting it, managing it so you won't have that. You're going to see him double down even harder on this. But California, the state, they've got to change their behavior. And I think what President Trump will do is put the mechanism is where Gavin cannot make this mistake again.
Since you left Congress, I know you've been focused on AI. I just want to end on this. But you've also become an informal advisor to President-elect Trump. You were at Mar-a-Lago just last week. Do you see yourself going into government, or do you like being that call on the outside?
Look, I served for a long time. I want to utilize the knowledge I have from being speaker and everything else, and also on the outside, that Congress starts looking at the issues the next 50, 60 years. I mean, if Congress is looking back to do the funding from last year, we're losing the battle for the next century. And I firmly believe whoever captures AI and quantum, so these are all the issues I worked on while I was speaker. You know, I went to MIT, which teaches a course to all the generals in our military. 4 years ago, I happened to develop a course to teach it to all of our members of Congress. The China Select Committee, right? The AI Committee. So whoever captures AI and quantum has the advantage. But if you want to capture AI and quantum, you've got to get the energy policy right. Otherwise, it'll never happen.
Yeah, the data centers.
So what I'm doing in the Alpha Institute is literally just policy, showing a roadmap for the policymakers to solve those problems. Just continue what I did while I was working there to help the policymakers and America succeed and be successful.
Former Speaker of the House, Kevin McCarthy, thank you so much for your time. John, it's clear he thinks one bill, but it might not be so big.
We'll see. Watch this space. A big space. Maybe a really big space, or maybe not at all. Look, we're talking about numbers of 4, 5, 6 trillion. We spoke to a guest just yesterday who was expecting a bill as big of $6 trillion US dollars from this administration.
You're not counting Doge. That ultimately is going to be the question. But this is the issue, right? How do they get those cuts through when this isn't necessarily a cabinet position? That's going to be actually one of the most interesting aspects of these negotiations.
I agree. In the third hour of Bloomberg Surveillance, here's your lineup. Greg Battle of BNP Paribas, Craig Moffett of Moffett-Nathanson, Jonathan Pingle of Natixis, and Terry Wiseman of Macquarie. From New York City, this is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
The equity market can move higher, but obviously people are worried about more of a melt-up in rates.
Rates are the things that pressure equities.
A lot of uncertainty with regards to what's happening in terms of bond yields.
Fiscal deficit, inflation issue that's not solved, all of that is in the mix and it's pushing up yields.
I think the bond market here is pricing in the worst case scenario for what the upcoming administration could or might do.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The third hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 just a little bit softer. We're down 0.1% on the S&P. Some important times for today's session. Anne-Marie's down in Washington, D.C. to observe a day of mourning for the late President Jimmy Carter. That funeral taking place. It means some changes to market openings and closes. The cash equity market will not open today, so that is closed. Equity futures are trading, but they will cease trading at 9:30 Eastern Time. And the cash treasury market will close a little bit earlier today at 2 p.m. Eastern Time. So some times to think about as we progress through the market day. As we think about the bond market, let's check out treasuries to begin with. Treasury yields are heading just a little bit further lower. On a 10-year yield, we're down by 4 basis points. On a 30-year, we're down by 5. So pulling back from these multi-year highs. In the UK, things stabilizing as well. Lisa, looking at the gilt curve right now, just about unchanged.
Which raises this question about, again, how much the U.S. is setting the tone for the rest of the world. If there's a bid in the U.S. Treasury market, does that give a reprieve to Rachel Reeves and the entire UK government that's grappling with something that rhymes with Liz Truss? Maybe it isn't exactly Liz Truss. And Liz Truss came out yesterday with a cease and desist letter to the government saying, guys, I did not torpedo the economy.
Do you feel sorry for Liz Truss yet? That every time there's a bond market sell-off, it's called a Liz Truss moment.
Well, maybe she should just embrace it because it's not going away.
Lehman going under, like a Lehman moment, and now it's a Liz Truss moment.
Do you imagine if that was like sort of your reputation? Well, that's the reason why she's sending a cease and desist letter yesterday, right on cue, as we get something that rhymes somewhat with, I have to say it, a Liz Truss moment.
The global bond market will be focused on one data point tomorrow morning, 8:30 Eastern Time. Payrolls Friday. 165K is the median estimate in our survey. The previous number is 227. I think that the British authorities are doing that. Talked about this yesterday and saying, please, a downside surprise.
Yeah, although I've been thinking a lot about this. Would it be something that would be positive for risk assets in the U.S. if you did get a downside surprise, and then the commensurate rally in the Treasury market that a lot of people are expecting? On one hand, you take some of the pressure off from yields. Well, that should be a good thing for stocks, given that the relationship has inverted recently. On the flip side, there is this issue that if you have weaker growth, what is the argument to keep going into stocks at elevated valuations at a time where we still haven't left inflation behind?
Equity futures right now down by a little more than 1/10% on the S&P. Coming up this hour, we'll catch up with Greg Battle of BNP Paribas as last year's rally hits a little bit of a wall. Craig Moffat of Moffat-Nathanson on why Apple is due for a big pullback. Look out for that. Big call from that team. And Jonathan Pinkel of Natixis, the most accurate forecaster of payrolls on Wall Street. We begin this hour with stocks inching lower as investors await tomorrow's payrolls print. Greg Battle of BNP Paribas saying volatility dynamics have been consistent with what we described earlier in the year as late cycle exuberance. Stretched valuations, positioning excess, and volatility suppression have all started to amplify risks of disorderly corrections. Greg joins us now for more. Greg, good morning.
Good morning.
That's a Bramo-type statement there at the top of this program. Disorderly corrections, where are we seeing those?
Yeah, so I think we got like a little bit of a sense of that in December, where what we had is this environment where equities were trending higher, huge inflows came into the market post the election, and then when we had a negative catalyst, we broke from this very low volatility regime into a big risk-off move. We got a 3% down day in the S&P. We got a 12-point one-day increase in the VIX. Large dislocations based off of the kind of negative surprise associated with the FOMC. So that's, we think, a little bit of a playbook for some of the environment that we could be in for this year.
That goes against some of the hopes and dreams post-election of a market that broadens out. And then we saw all this negative breadth, that the Russell, the small caps would start performing, and then basically the Russell's rolled over and we're unchanged since election day. What is it going to take for this market to broaden beyond Mag 7?
Yeah, I think the price action is amazing. We got these huge one-day moves the day after the election, and then we saw some follow-through, but that totally evaporated through December. So what we need to see is evidence of breadth coming in from earnings season, and we need to see this kind of macro environment remain in a kind of Goldilocks type state where the data is good. We do need strong nominal GDP growth, but not too hot that the bond market derails things.
I'll take your disorderly corrections, and I will counter it with something Nick Colas of DataTrek was talking about, which is he lived through the 1995, 1999 period and the subsequent 2000 to 2002 period. And he said the hallmarks of the sell-off was higher volatility. And we're not seeing that. So without that, and given the fact that there's something behind some of the dynamism people are talking about, he remains fully bullish. Why do you reject that? Why don't you think that it is an indicator that we haven't seen a real spike up in the VIX?
What we've seen is quite a nuanced volatility market. So if you do look at the VIX behavior through the second half of 2024, you do have some evidence that it is starting to become more reactive. So we think we're in an environment where there's an awful lot of volatility selling, which has a self-feeding mechanism of suppressing volatility locally, but then potentially you can get some breaks out of that where the market becomes more volatile. So we saw two instances in the second half of last year, one in August, one in December, where we had some very large spikes in the VIX that quickly mean reverted. I think that's slightly different behavior than what we've seen in the 12, 18 months prior to that.
Is that what you're talking about with the disorderly correction? Is that sort of the contours of it, or are you expecting something slightly different as this year goes on?
No, I think the regime that we saw in the back end of 2024 is something that we think continues into 2025. So this isn't to be confused with just a pervasive bearishness. You know, we think Q4 earnings season is going to be the most important catalyst in January, and it wouldn't surprise me if we see the S&P make new all-time highs. But as the market moves higher and we get more and more risk building in the system, it then leaves us vulnerable to these very rapid unwinds where the VIX can spike aggressively and we can move from a very low vol regime into a high one very, very quickly.
JP Morgan reporting fourth quarter earnings next week. I think Delta is actually the first. But JP Morgan sort of kicks it off, and that's going to be something interesting. I know you're laughing because, of course, I'd pay attention to Delta reporting earnings first.
No, I'm with you. And I'm laughing because I think JP Morgan likes to think they kick off earnings season, even though another company does.
So just let's give Ed Bastian his due. He is kicking off earnings season. I guess it goes to the heart of the question. What's more important, growth or the rate regime?
I think it's both. So what we need for equities to perform here is to have strong growth. We can have a little bit of inflation, high nominal growth that drives high earnings growth. And maybe we can digest kind of gradually higher rates, but what we need to avoid is a rapid spike in yields. So I think if we were to see the 10-year yield, for example, punch through last year's highs very rapidly, that would drive a risk-off move for equities. What we need to see is this kind of classic Goldilocks environment where rates can stay higher for longer, but are not moving in a very volatile fashion, and we get strong nominal GDP translate into strong earnings growth.
What degree of confidence do you have that we're going to get that?
I think we might get pockets of it. I think our whole thesis for this year is that it's going to be really tricky to navigate. I think there'll be some parts of this year when it feels a little bit like 2017 from Donald Trump's first term, which was the lowest volatility year, despite some of the headline risk for equities in 50 years. And then we moved into 2018, where we had trade and tariffs dominate. We had a hawkish Fed in Q4 2018 derail things.
Volmageddon at the start of the year.
Volmageddon, exactly. And I think that's a good example of where volatility suppression, an ultra-low realized volatility environment in 2017, built up too much risk that then unwound very aggressively in 2018.
So it's a blend of 17, 18 that you're expecting.
And I think that one of the key features of this market is that it's going to be very episodic, and we could bounce from one regime to the other very quickly. So we think that using the optionality market, there are ways to position yourself to try and navigate that. But we do think we'll get this kind of strange conditions where volatility is not homogenous. It's not a high volatility or a low volatility environment. It's high vol.
What's the opportunity right now then?
Well, I think that there's two things that we're looking at. One is looking at the stocks or sectors that you like, where you think that there could be good releases through Q4 earnings. We think we've seen a big retracement in some of those stocks from the highs. So I think there are opportunities to add some risk there. And then I think there are opportunities to hedge. I do think that when we have periods of de-risking, the VIX will be explosive, and that's something we think we can take advantage of.
Like a 2018 explosive, or just like 10 points in a day explosive?
So I think depending on the news flow, I mean, we had 12 points in a day in December, and that wasn't an environment where things were really breaking or anything was going on. So I think we can get bigger moves than 10 on the VIX.
So is this another way of saying that there isn't a lot of conviction and direction, so just play with the market on a day-to-day basis?
Yeah, I think what we've called this is late cycle exuberance. And what you see is these pockets where people put a huge amount of money to work, and the right tail can essentially overshoot, and then you can have these large periods of de-risking. So I wouldn't necessarily say it's day-to-day, but it is month-to-month, quarter-to-quarter. You know, we're much more focused on where do we think the market is going, what are the opportunities in the next month or 6 weeks, than we are thinking about where the market will end the year.
So how much are you trading January 20th?
So I think January 20th is one of the key catalysts in what is a catalyst-packed January. So, I mean, tomorrow we have the payrolls print, then we have CPI, we have the FOMC at the back end of the month. Q4 earnings, I do think, is probably more important than January 20th. But January 20th, I do think, is something that we should be mindful of. It falls 2 days before the January VIX expiry. So if we were to get headlines that the market didn't like in and around January 20th, again, I think the VIX could be explosive.
So no one's listening, so no one's going to actually get mad at you for saying this, but is Jensen Huang more important than Donald Trump to this market?
I don't think so. I think that what is more important for this market is whether we start to get breadth. So we've had this huge rally that's been driven by the mega caps. And what the consensus, what the street is actually looking for, if you look at the consensus forecasts for things like equal weight S&P relative to market cap weighted S&P, is a bit of a catch-up trade this year. So I think if we end the year higher in equities, it will be because the cyclical outlook has been okay. Whether that's Chair Powell, the macro data, the corporates, or Donald Trump, a combination of all of these things.
We've heard a few times this week is Jensen, haven't we? A couple of times on this program.
Which is bold, because then, you know, there could be a phone call. Excuse me, let me tell you. And, you know, from the White House.
Oh, you think Donald Trump's going to call market strategists and tell them?
He could call Greg.
He could call Greg himself.
He'd be like, really? You think that I'm not the most important guy in the room?
I mean, you're coping with this cold in New York City, Greg?
The cold has been somewhat challenging.
Just two Brits talking about the weather, Bramwell.
Oh, yeah, I like that. How you
just let it happen.
Okay, go, please, go. Carry on.
So I have come armed with the sweater today. I think the windswept avenues in New York are a little challenging.
Would you swap it for the damp cold of the United Kingdom, though?
So I think this is a little bit like the markets, right? We're concerned about both tails here. So we're concerned about inflation and we're concerned about growth. I'm concerned about the UK weather and I'm concerned about New York. So I think, again, we have to be vigilant on the weather front.
Greg Battle, appreciate it, sir. Well put. Greg Battle there of BNP Paribas, I think. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Los Angeles is experiencing its worst natural disaster in decades. 5 fires are burning across the city, driven by hurricane-strength winds. At least 5 people were killed, and more than 100,000 residents were forced to flee their homes. Major landmarks, including the TCL Chinese Theater and the Dolby Theater, which is the home of the Academy Awards, as well as parts of Hollywood Boulevard, were under an evacuation warning. Federal Reserve Bank of Boston President Susan Collins favors fewer cuts in 2025 due to strong employment data and lingering inflation. Collins expects inflation to decline, but does warn that progress will be bumpy and uneven. Collins is less concerned about the labor market, but will be watching closely for any deterioration, noting that she believes that the U.S. economy is in a good place. Poland's president has asked the government to protect Israeli leader Benjamin Netanyahu from arrest in the country. Netanyahu is speculated to be considering attending the commemoration of the 80th anniversary of the liberation of the Auschwitz death camp later this month. The Israeli premier is subject to an arrest warrant by the International Criminal Court for alleged war crimes in Gaza. That's your brief. John.
Danny, thank you. Appreciate it. Up next on the program, one big morning call. Craig Moffett of Moffett-Nathanson with a rare sell rating on Apple. That conversation up next, live from New York. This is Bloomberg.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world, only on Bloomberg.
Equities right now, negative by 0.1% on the S&P 500. Almost said 1 hour away from the opening bell. There won't be an opening bell today. Equity futures will close at 9:30 Eastern Time. We've got some trading, though, in the bond market. We'll get an early close at 2 p.m. Eastern Time this afternoon. In the bond market, Treasuries firmer, yields lower. We're down 4 basis points. The 10-year 464.65. Going into payrolls tomorrow morning, the estimate in our survey is 165. We kicked off the trading week by catching up with Priya Misra over the last week over at JP Morgan. Priya made the point, Lisa, that she believes that risks are skewed to the downside for yields and that the possibility of surprising the upside on things like growth, on inflation, have been diminished somewhat over the past few months.
And certainly that's partly because of the setup that we've seen just with all of the...
Big change.
Right, and the increase in inflation expectations, the increase in also just growth expectations that have been baked into yields. How much is this set for a rally? My question is, if you get a downside number and you do get a bid into the bond market, do you get a commensurate bid or a sell-off in the equity market? That, I think, is going to be a real tell.
Depends how much we miss the median buy.
I know.
It's like 10.15.
You're running.
Goldilocks downside surprise.
Depends on the
Sub
data.
100.
If you look at this one.
You think I'm running to be the next Fed chair?
100%, yes.
Okay, all right. Who do I need to... I need to get in touch with Scott.
Please.
Besson. In Treasury.
Please, go ahead.
I said this earlier, no one wants that. Nobody. I'd like to see Bramo in the seat.
Oh, okay, okay.
Are we jacking rates up? I don't know.
I don't know.
We're cutting rates because things are so bad.
All right, let's move on. Nobody wants that either.
Let's turn to tech. Apple down over 6% since the start of the year as weak iPhone sales and bearish sentiment wound the stock. Craig Moffett of Moffett-Nathanson is now one of those bears, writing, as great a company as Apple is, the outlook for shares given this challenging backdrop is unfortunately decidedly unattractive. Craig joins us now for more. Craig, welcome to the show. Let's talk about why you believe it is decidedly unattractive. What's that about?
It's mostly about valuation. By the way, I fully think you would have been fantastic for Treasury, by the way. So my 2 cents.
An endorsement.
Yeah, that's an endorsement. Look, this is a valuation issue. Apple is a great company. As I said, it is not a broken company. It's a broken valuation. And the point we were making is as Apple has appreciated, particularly in the last call it 6 weeks or so of 2024, there was all this commentary about the fact that Apple was sort of melting up with no real news. In fact, there was a lot of news, and it was bad news. You had very negative reviews of Apple Intelligence and lukewarm sales reports coming out of both the U.S. and China for the iPhone. You also had the introduction of retaliatory tariff risk when Donald Trump was elected. Over the time since we had initiated coverage back in August, you had Judge Amit Mehta in the Google case come out and specifically say that the payments that Google makes to Apple for search placement, which, by the way, represent 25% of Apple's operating income, are patently illegal. And in the face of all of that bad news, Apple's stock actually went up instead of down, to the point where the valuation simply wasn't at all attractive. And to frame that, and we can talk about rates in a second, because rates are obviously part of the story as well. Sure. But to just frame it relative to the rest of the Mag 7, to which it's typically compared, it's trading at a PEG ratio of about 3. The PEG ratio for the rest of the Mag 7 is about 2. So you've got a really unattractive setup, even relative to a group that I don't think anybody would argue is cheap at the moment.
So let's focus on the valuation. And the question I've got for you, Craig, on the multiple, I think would apply to Tesla as well, but you can answer it with regards to Apple. You've got a company with a high multiple, even though the core business has gone ex-growth or is facing growth headwinds, because there are hopes about what the company could be elsewhere at a time when interest rates are still around 5%. So, Craig, I think this applies to companies beyond just Apple. What are we doing up here, and what is the appropriate multiple for a company like that one?
It's a great question. When we looked at this, goes back now a few months, but when we initiated coverage back in August, we were comparing the upgrade cycle at Apple to the upgrade cycle back in, say, 2021, when they, with the iPhone, the iPhone for 5G, where you had this globally synchronized growth cycle for Apple at the time. And just comparing where rates were then in the wake of COVID versus where rates were in August of this year, and they're now even higher, suggested that you would need about a 30% faster growth rate today in order to justify the same multiple. The growth rate is actually slower now. The multiple is higher. And so you really do have this mismatch between growth expectations and interest rates. And rates are historically low, as you said, but still, relative to most of the past decade, are actually quite high.
So just to build on that, Craig, and your dog is very cute, going forward, there's a real question here about whether just in general, some of the tech behemoths are going to be pressured just by virtue of where rates are, because it challenges just the growth story that you could potentially get.
Well, it's whether it challenges the growth story isn't as much the issue as simply what's the appropriate discount rate to use. And I think the risk-free rate in calculating WACC, your viewers, I think I heard you say earlier, no one's listening today, but your viewers are more sophisticated, I think, in understanding that the risk-free rate as an input to WACC makes a real difference for how you think about multiples. So now the risk-free rate may be higher because growth expectations overall for the economy are higher. But the growth expectations for Apple specifically haven't really kept pace. you have to expect not just a big upgrade cycle for Apple in handsets or potentially some big AI-driven services revenue stream, but for the upgrade cycle specifically, you have to assume that that's a permanent upgrade cycle. That is, that it doesn't just create a big bubble of one-time upgrades for AI, but in fact is a permanently faster growth rate in order to justify the multiple, particularly in the face of higher interest rates.
Is there anything that Apple could announce when it comes to artificial intelligence adaptations or anything that you've heard about them working on that could change your view?
Well, sure. And look, again, I want to be really clear. I am quite positive about Apple's strategy in AI. All the things that are said that are said about Apple and how good their strategy is, that it's capital light, that they have a trust advantage with customers, that they have a unique position for agentic AI because they control the calendar and the contacts and the wallet and what have you. All of that is true. We think Apple is incredibly well positioned for AI. It's just that all of that is already priced into the stock. And so you have to question, well, what is dramatically different beyond that sort of quote unquote story about winning in AI that would justify the valuation? And by the way, we haven't talked about, I mentioned the risk associated with the Google antitrust case, which is very real. Again, a judge saying that the payments are illegal. We haven't talked about China and the challenges that Apple will inevitably face in China, not just because the competition in China is much stronger than it was, whether it's Huawei or whether it's Honor and the handset competition, but also the limitations that AI is almost inevitably going to face in China, because the Chinese government is simply not going to allow Western large language models to answer questions like what happened in Tiananmen Square. So there are going to be all these limitations in China and the potential for regulatory or retaliatory tariffs, all of which says that you have to be sober about the multiple that you apply.
Greg, the dog's not impressed at all. It's good to see you, sir. It's good to see you. I'm finding the pictures of the dog just instantly relaxing, aren't you?
I would agree. Instantly relaxing.
We need a puppy
adorable.
in the studio. We're going to borrow Craig's, all right?
Can you imagine?
Craig Moffat and Moffat Nathanson. Clinic there on Apple, by the way. Some real issues, particularly in China, across multiple dimensions.
What's interesting to me is 34 of 49 analysts who cover Apple have buy ratings on it. So this is actually a really out of consensus call.
Super rare.
And to me, it's sort of interesting, especially in light of just the obvious valuation pressures. And, you know, you start to zoom out. Where else is that kind of applicable?
You're seeing it elsewhere, as we mentioned. Up next on the program, we'll catch up with Jonathan Pingle of Natixis, the most accurate forecaster of payrolls. More accurate than his dad. We'll talk about that in a moment. Terry Wiseman of Macquarie joining us too from New York. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Equity futures this morning down by just 0.1% on the S&P 500. Similar move on the Nasdaq. Let's check it out. On the Nasdaq right now, we're down by 0.2. The rust of the small caps just about unchanged and basically unchanged since Election Day in America, which is absolutely phenomenal given the hopes and dreams that we had after Election Day for small caps to start outperforming.
They tried. I'll give them credit. They
had
tried.
a great November.
They had a great November.
Terrible December.
December was not the Christmas that people were looking for, and I guess the key question is how much is dependent on growth and how much is dependent on the bond market that just hasn't given it a break.
US equity markets, of course, closed today, but we can take a look at some of the price action elsewhere with Manus Cranny. Manus joins us now. Hey, Manus.
Jonathan, Lisa, good morning. All dreams of the equity market, they crash into the beach that is called the bond market. And this bond market is drawing breath this morning in the U.S. It started as a depth charge and the fear over term premium in the United States of America, dissipation in Fed rate cuts. So that depth charge exploded in the U.S. We paused this morning, 4 basis points lower. Is that the top? Is that a pause from the Fed all priced in? But this is where it washed up in the rest of the world, in Japan, in the United Kingdom. You're looking at rates here that we haven't seen in the UK since 2008 and Japan since 2011. So this is the triage. The triage for this bond eruption from the US and the rest of the world is about fiscal restraint. It's a lesson for the US. Marvin Lowe was with Danny and I this morning, and he said, look, if it's just inflation getting contained, that's the job for central banks. But when it comes to term premium, that's when the casualties show up in the rest of the world. Sterling also under pressure as well. When you have Martin Wheel, an ex-Bank of England governor, talking about, not governor, but on the board, talking about a nightmare from 1976 for the United Kingdom. In other words, a fiscal nightmare of where they had to go to the IMF. They had to borrow $4 billion from the IMF. That's what's being talked about in the UK. So what are the lessons from the triage for the rest of the world for here in the United States of America? This is the risk of one big beautiful bill. What does it cost? What is the price of the one big beautiful bill? Those extended tax cuts and some will materially impact on the fiscal position of the United States of America. And that's when you begin to see 2s, 10s steepen, not from the 50 basis points of where you are at the moment, but potentially to 100 basis points. And that triggers a much bigger global phenomenon. Again, not just triage for the rest of the world, but serious hospitalization. Jonathan, Lisa.
Manus Cranny, honestly, you and Lisa should have a show. Just the two of you. Talking like that about bond markets.
I don't say hospitalization. I mean, I think that, look, I'm not going to catastrophize.
Tragic.
Yeah.
You're not going to catastrophize.
I never do that. Okay, let's move on.
It's an original moment. Investors are waiting December payrolls. They drop tomorrow. A Bloomberg survey of economists showing a median estimate of 165,000 jobs added in the last month of 2024. Jonathan Pingle of Natixis is expecting a print of 175,000 and for unemployment to hold steady at 4.2. I'm pleased to say that Jonathan joins us around the table. Jonathan, good morning to you.
Thank you very much, Jonathan.
Have we got the picture in the control room? Because we have to start with the picture in the control room. Jonathan is the #1 forecaster of payrolls on Wall Street. At #2 is his father, Jonathan Pingle of UBS. We did a fantastic write-up of this over the holidays. How did it feel to beat Dad and go back for Christmas and tell him?
It was definitely a positive at the dinner table.
Let's talk about your forecast. What has helped you be as accurate as you have been? What's been the guiding light for you?
I mean, I think the biggest source of explainable variation in payrolls forecasts has certainly been the outsized seasonal distortions post-pandemic. My entire forecast horizon or forecast period of doing this has been post-pandemic, and that's been the largest month-to-month explainers variations. But in general, if I was giving like advice for forecasting more broadly, you get most of the gains through disaggregation, breaking it down by sector, breaking it down into the subsectors, and really trying to figure out the seasonal variations of those.
This comes at a time when a lot of people will take a look at any data point. I'm looking at JOLTS, for example, and they'll come up with completely opposite interpretations that both seem justified by the data. You could either say it's a great market because job openings increased and actually were much higher than expected. You could say it's a terrible one because the quits rate fell off a map. Which one do you look at? How do you sort of understand conflicting signals like that?
I mean, I think you really have to take it in a pattern, right? Like if you look at the 3-month moving average of payroll gains, if our forecast turns out to be correct, it'll be down to 146,000. That's coming down from an overall yearly pace of 180,000. If we look at where we were last year at the same time, it was 212,000. This is a moderating labor market. It's cooling, it's softening or going into softening, and that's not one where you can look at an individual kind of outlier number and really change your whole forecast for that.
Do you have a sense, though, of how fragile it is? I mean, this is something that we keep talking about. This is a frozen market. You're not seeing people being hired. You're not seeing people fired. And everyone's just waiting to see what happens on January 20th. And then all hell will break loose in one way or another. Do you actually see that?
I mean, I heard Greg yesterday call it frozen. I'm not sure that it's completely frozen. I do think that there's still more room for it to cool. We do see the unemployment rate gradually rising over 2025 up to 4.4% at the end of next year. We do think that there is room for payroll pace to slow down, and we do think that there is real reason that maybe post Q1 there's going to be a lot more discussions on whether the labor market's weakening and a bit more worries there.
You're a student of history as well. How unusual would it be for unemployment to rise as much as it has and then not to have a recession off the back of that?
I mean, I guess you look at the Sommerville indicators and triggering there, it would be quite unusual. But this is a completely different labor market than we've seen before.
What's different about it, Jonathan?
Well, we're at a place right this second where hiring's stalled, quits have stalled, and we're in now a world where businesses are really uncertain and don't really want to take a next step into figuring that part out. And when you're in this kind of world, the movements are really, really slow. And I'm not saying that there needs to be necessarily a tipping point for that to break or one way or another, but for me, keeping with trend and moderating continually seems like the right action.
One aspect of this labor market that's been very confusing to me, and Greg Dacko talked about this before, is historically, as a student of history, the labor market has been a lagging indicator. It is the last one to feel some of the economic cycles. This time, people are looking at it almost as a leading indicator. How do you square that, this idea that this will be the real tell that we're heading towards something negative?
I think it's hard. I mean, I think if you're looking at a Fed that's looking at it as the deciding indicator, right? Like when you have a Fed that puts so much pressure on individual inflation prints and individual payroll prints, unemployment rate prints, it puts us in this state of let's keep looking at this one, be a decider. Is this where this moves? Is this where this is going to change? But in general, I do think you need to take a step back. I think there's a lot of outsized looking at the unemployment rate changes when the statistical significance of these changes is very, very hard. You need a 600,000 employment change to be statistically significant at 90th percentile for unemployment rate. That's like a 30 basis point move, right? Like that's not a normal occurrence. And that's why you need to be looking this in a trend.
There's a lot of skepticism about the accuracy of this data. A lot of people just simply write down 60,000 jobs off the top of every headline number that we get, just simply saying, that's what we're going to find out next year anyway. How do you account for that noise?
I mean, again, it's looking at moving averages a lot of the time. But I do think that this world where revisions to payrolls are giving it a wrong message, it is the most accurate look of where a month-to-month the job market is, right? On a month-to-month basis, the statistical significance of payrolls is like 130,000, right? So it's a lot less. It is going to be the best place we're at. It gets benchmarked to UI claims, and there is a really great revision process to this for the right reasons. And you know, I think you need to keep that in mind. You have these and you mentally adjust. You know, you look at the last numbers, everyone's mentally adjusting down by 100,000 for the impact of hurricanes and job strikes. And, you know, there is a lot of mental adjustment going on. But, you know, with the context, you can start to build this bigger picture of a moderating, cooling, and, you know, not all that great, but not all that bad labor market.
Jonathan, appreciate your time. Congratulations on the performance. Just stellar. Thank you, sir. Appreciate it. Jonathan Pingle there of Natixis. Payrolls, of course, dropping tomorrow. The median estimate in our survey is a 165. The previous number, 227. Let's cross over to Mike McKee, our economics and politics correspondent, for a whole lot more. Good morning, Mike.
Good morning, John. Well, everybody's going to be watching what the Fed is going to be watching, and that is the unemployment rate, because that's become sort of their lodestar for where they think the employment side of their mandate is going. And we saw that in the minutes yesterday, where they talked about the fact that it doesn't look like the labor market is weakening at all. I wanted to show you this here. A lot of talk about whether or not the Fed is tight, and people on Wall Street say, well, economic conditions are loose, but borrowing costs, look at that. From when the Fed started cutting rates, borrowing costs have barely moved for credit cards, homes, autos, and even the prime rate. So we are still seeing some tightness in the economy, and if they leave it this way, that may help bring down inflation in the future. That's kind of the big deal out there for people right now. Does the Fed move anymore? Given where they have moved, it's going to be a question of whether they think the economy really needs it or not.
Next up, the payrolls report tomorrow morning. Mike McKee, thank you. Just getting confirmation, Lisa, that people are at work. I don't know a single person that's got today off. I don't know a single person in this market that's taken today off.
Okay, I'm going to say something. I'm going to get hate mail since there are people watching.
Michael O'Rourke, Jones Trading.
Okay.
I am watching. Excellent conversation with Craig. Thank you.
And Craig was excellent. I will say that. I will just note this. The bond market has it right. The stock market has it wrong. I mean, I think that it's important for us to remember Jimmy Carter. And I'm not saying that. No, I'm not taking that.
Keep digging.
I'm just saying that. Let's just move on. All right, this is terrible. I'm just saying that I think that just to have, you know, a moment, but I'm not going to rescue myself from this.
No? Okay, we don't? All right, let's move on.
Wow.
Bonds? How about those bonds? I'm not sure where you were going. Fireworks in the global bond market in the last 24 hours. The UK 10-year yield hitting its highest level since 2008. The 30-year, the highest since 1998. Investors nervous about inflationary pressures and debt sustainability. A man who's seen it all, Terry Wiseman of Macquarie, joins us now for more. Terry, it's good to see you.
Good morning, Jonathan.
What's behind these big bond market moves, not just in America, but worldwide?
Yeah, let's keep in mind and put the UK's bond move in context here. There's been a rally in bond yields around the world for the last few months, in fact. And I think a lot of it does have to do with the concerns, if you will, about debt sustainability and higher deficits and the inability of some of these governments to bring down their deficits. But of course, this has been also magnified to some extent by the concerns around President Trump assuming power in the U.S. and the tax cuts, presumably that will happen here, or at least the inability to reduce the deficit here as well post the election. So there's been this general theme of higher deficits, more bond supply. This is certainly not the first time in the last few months that the UK is being subjected to these concerns. Keep in mind, there was a mini concern very similar to this one back in October with the budget announcement there. And until we get a situation where these governments are willing to commit to deficit targets that are much lower than the current projections for 2025 and 2026, bonds will unfortunately be under pressure. That is, bond yields will stay high.
Markets change, and investor attitudes towards markets can shift as well. And I think a good example of that was the Eurozone debt crisis, when investors began to treat certain bond markets in Europe on the periphery as a credit and not a sovereign. What's happened with the UK? What is the attitude shift? How are we treating UK government bonds?
It's interesting. What's happening today is a little bit different than what was happening in October. If you recall, when Keir Starmer's government came into power post the July election, there was also talk about not committing necessarily to a lower deficit, but actually to more spending. And if you recall, the budget announcement in October that came out of the UK committed the budget to more infrastructure spending. And as a result of this, there was going to be more bond supply. What was different at the time, though, was that, yes, gilt yields rose, just as they have in the last 48 hours. And they rose significantly, but the market was not very concerned about sovereign risk back then. If you look at CDS spreads for the UK back in October, they rose by about maybe 2 basis points. Yes, a move up, but not significant in the grand scheme of the general trend of sovereign spreads for the UK. Over the last 48 hours, this time, however, CDS spreads have risen by more, by about 4 or 5 basis points, twice as much as we saw in October. And I think what this suggests is that the market is transitioning away, a little bit away from the worries about simply more bond supply to concerns about whether or not the UK in the long term will be able to honor its debt obligations. That's a qualitative difference in what we saw in October. Should it be seen as more worrisome? Yes, absolutely. But in the context of a bond market where everyone all of a sudden, certainly since November, not as early as October, but since November, has become more concerned about these deficits and debt sustainability, maybe this isn't that much of a surprise.
Which really goes to the point of the great British peso that we were hearing about from Jordan Rochester that some people have discussed. I wonder if there's a simpler take, and I'm stealing an idea from John here, the idea of crowding out, and that the U.S. bond market is basically sucking the oxygen out of the room, given the fact that it has risen so much, and yet the U.S. is actually displaying growth in contrast to some of these other economies.
Yeah, there is definitely substitution among sovereign bonds within the bond market. When yields go up in one country, it does tend, and certainly as in a country as large as the U.S., where the bond market is so dominant within the global bond asset class, you do see pressure on yields elsewhere. That makes complete sense. Traders like to chase yields. They like to go where yields are higher. They like to go where the rate of return is highest, sometimes indicated by yield. And if U.S. yields are going up, it's going to put pressure on yields globally. No doubt about it. But at the same time, if we had been seeing a situation where the U.S. was not getting its deficit under control, but Europe and the U.K. were, I certainly don't think that yields in the U.K. and in Europe would have risen by as much as they have over the last few days. This is part of more of a global glut of bonds that the market envisions coming out in 2025 because of these deficits, and it's specific to the U.K. as well, because they had a budget announcement in October that specifically intended to raise the amount at a time when other European countries, France, for example, are trying to get, or at least making sounds as if they are trying to get their budget under control.
This is a historic day, and I want to take a historic approach to what we're looking at right now. Are you seeing an increase in yields as investors demonstrate exhaustion with financing the deficits of economies across the world, and that essentially this is the new regime? And there isn't going to be a free lunch in the same kind of way that there was before. And this is just the beginning. It is not the end.
Yeah, somewhat ironically, the reason we're seeing this exhaustion is because, at least in some countries, the U.S. being the primary example, growth is actually pretty good. And when growth is pretty good, people feel good about themselves, they want to spend, and as a result, they don't save as much. Now, there may be structural reasons why savings rates are low in the UK and in Europe as well. But keep in mind, if there is a lot of bond issuance, the way to effectively solve that is to have bond buying, right, to keep yields low, to have demand for those bonds. And that can only come from greater national savings. Yes, the government can save more by issuing less, but the public and businesses can buy those bonds if they choose to reduce their own spending. The problem in part is that we have a situation globally where growth is not so good as to help revenue growth sustain spending at the governmental level, but growth is not so bad either that we should have a flood of savings coming in because of concerns to buy the bonds. We're in that middle range where governments can't seem to draw on enough savings from their domestic economies to have that market clear at a lower yield. The irony, of course, is that if we were to have a global recession, including one in the U.S., and I'm not suggesting we will, bond yields would still go down. Why? Because all of a sudden, the money would fly out of these riskier investments like the stock market. Consumers would stop spending as much as they have, their savings rates would go up, and all of a sudden you would have plenty of savings to sustain the bond issuance of these governments. I'm not saying that recession is a solution to this problem, but let's keep in mind that this is one of those things in the outlook that could bring yields down.
That's the real test. If we go into a downturn, the deficit's going to gap out, they're going to want to lean in and provide some fiscal support. Will treasuries give them the space to do that? Will they rally, or will they sell off?
I think they will rally. If you look at the history of at least recessions in the U.S., I don't claim to have a historical knowledge of every detail of every recession globally, but in the U.S., even though from time to time deficits do expand during U.S. recessions because revenue growth is poor at the federal and governmental level, you typically see yields come down. 9 out of 10 times when there's a recession in the U.S., yields come down, even despite what might be happening in the background at the deficit level.
That is what a developed market sovereign should do, and let's hope that's the case.
That's right.
Next time around. Terry, it's good to see you. Thank you.
Pleasure.
Terry Wiseman there of Macquarie. If these issues weren't taking place in the United Kingdom and elsewhere, and we just took the Treasury market in isolation, 425 at the front end, anchored around Fed funds, some steepness in the curve, the 10 years up to about 465. Does it really look like this market's starting to question the debt sustainability of the United States of America? I'd say not yet.
Not yet, and we've heard that from Menace Crenny several times, that this isn't necessarily a bond vigilantes or Liz Truss moment. However, the timing is curious. The fact that we haven't gotten hugely inflationary data or an increase in inflation expectations, that the 40 basis points in December really had to do with something else, and that something else.
That's the point that Torsten Slok of Apollo's made, yeah. I hear you, I hear you. Any comments on your earlier comment?
I'll just say this.
Say?
Yes,
Okay.
First of all, I think it is an important day. I think it is historic. I think it is incredibly important to remember Jimmy Carter. I think that it is not a national holiday. You're looking at me with credulousness. People are in their seats, and we have a moment that Jimmy Carter would want to go on. And so I think a lot of people are betting on this, and I think that that's the reason why. Everyone's at work. It's not a holiday.
This is your correction, that the late president would like the equity market to trade. That's the correction. Okay, all right. Let's get you an update on stories elsewhere. Let's move on quickly. You had 5-10 minutes to think about that. Let's get to your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. The National Weather Service has downgraded its fire forecast for Southern California. The outlook has gone from extremely critical to critical through Friday. 5 fires are burning across Los Angeles, driven by hurricane-strengthened winds. At least 5 people were killed, and more than 100,000 residents were forced to flee their homes. A union representing U.S. dock workers reached a tentative deal with port operators for a new 6-year contract, avoiding a strike. Bloomberg has learned that the agreement guarantees union jobs when certain technologies are implemented. That includes the semi-automated cranes that had been a sticking point. The deal still needs to be ratified by the two sides. Morgan Stanley promoted 173 employees to the top rank of managing director. That's 12% more than last year, but lower than each of the 2 years prior. Major U.S. banks have been bulking up promotions to the top ranks, reflecting their strong performance and expectations for a robust business environment ahead. And that's your brief, John.
Danny, thank you. Thanks for this morning. Up next on the program, we'll set you up for the day ahead, and we'll catch up with Anne-Marie down in Washington, D.C. From New York, this is Bloomberg.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, you can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I never.
Ready? Go.
Morning, this is
In Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equity futures on the S&P just a little bit softer. We're negative by close to 0.2%. Stability in the bond market. Stability, another word for a rally. We're down by 3 or 4 basis points on a 10-year, 465.26. The trading diary through this week and into next week today. U.S. equity markets closed for a national day of mourning for former President Jimmy Carter. Tomorrow, December payrolls. On Wednesday, looking ahead to next week, the next big data point after that is CPI. And we get some earnings from JP Morgan. That's going to be a big week. Thursday, more bank earnings plus another round of jobless claims. We will have special coverage of President Carter's funeral starting in just a few moments' time. Anne-Marie's going to be leading that coverage for us. AMH, just to get some final thoughts from you on what you're hearing down in Washington in your 24 hours that you've been there and what we can expect through the next several hours.
Well, the next several hours is really going to be about Americans and also past, former, and future presidents gathering at 10 o'clock for the full service for this funeral for the late Jimmy Carter, the 39th president of the United States. And we will be hearing a eulogy from President Biden about Jimmy Carter. And I think something that Americans are really going to take away is how he's going to end the day. He will be transported back, Jimmy Carter, to Plains, Georgia, and there will be a private family ceremony. How he came to Washington, wanting to really take away the pomp and circumstance, and how he has become very popular at 100 years old when he died. For the 44 years he spent after his presidency, working on things like human rights, like global health policy, like making sure there's fair elections around the world. I think that is what Americans are going to take away from today. And I think that's what you'll probably hear from his family and President Biden when they reflect on his life and legacy.
Anne-Marie, thank you. Looking forward to your coverage. AMH alongside David Gurra in about 5 minutes' time. We'll not be asking you your thoughts on any of that whatsoever.
I think it's very important to have reflection, and this is totally independent. I think that it's actually really important to remember the history and where a lot of the current policies stem from and what happened. I think it's very important to represent and study history.
I'm just winding you up.
I know you are.
Do you want to talk about payrolls?
Yes,
Final
it's happening
word
tomorrow.
on that, please.
Well, I just think that the most interesting thing about tomorrow's payrolls isn't just going to be about payrolls, but the market's reaction to it.
Couldn't agree more.
The idea of, and you talked about this quite a bit, the idea of the bond market potentially seeing a big rally. What does the stock market do with that?
Mohammed Al-Arian wrote in the Financial Times to close out 2024 that the vigilantes were back. Mohammed's joining us tomorrow morning. Do not miss that. He'll join us to co-host the program from 7 o'clock in the morning to 9 o'clock. So 2 hours with Mohammed Al-Arian. We'll also hear from Chris Ferrone of Strategas. We'll hear from Ellen Zender of Morgan Stanley, Nadia Lovell of UBS, and a whole lot more. A world-class lineup for you on Payrolls Friday. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China show live every weekday.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome to special coverage of Jimmy Carter's state funeral on Bloomberg TV and radio. I'm Anne-Marie Hordern, along with my co-host, David Gura. We will take you live to the National Cathedral here in Washington, where the 39th president will be honored by President Biden, along with former U.S. presidents, members of Congress, and other dignitaries. After the service, Carter will be flown back to Georgia for a private family funeral service. A motorcade will then take the former president and his family on a final journey through his hometown in Plains, Georgia. Carter will be interred next to his wife, the former First Lady, Rosalind Carter. It's very poetic almost and very symbolic of who Jimmy Carter was as a person, how he came to Washington, and how he's going to be remembered.
It's this amazing century-long arc. So we have him here in Washington for one of these very rare events. Of course, it brings the entire nation together, but the city as well. You see the departure ceremony underway at the U.S. Capitol. The streets here in D.C. Are closed. The federal agencies are closed. All attention is on this, as it has been for the last couple of days. He was born in Georgia in a very small town, moved to Plains as a young man, returned there after he finished the presidency, after one term, and the state remained so incredibly important to him. Emory, he, of course, went to Emory University, established the Carter Center, and it was his base then, post-presidency, as it was before. Even when he was campaigning for president, he would take these 5-day trips around the country, staying with prospective constituents in Holiday Inns, and then return to Plains every weekend and became kind of the center of that campaign. So there is, as you say, something poetic and very circular about him ending this journey there today.
And I think Americans will remember him as what he did after his presidency. Kai Bird talked about this. He used the White House as a stepping stone for bigger things. Normally, that's not how you remember presidents. His popularity really came from those 44 years after he left the White House and everything he did in terms of global health. The fact that he lived this simple life in Plains, Georgia, going back to that house that they had before he moved to Washington, D.C., and didn't go out and enrich himself and hobnob, some would say, with global elite individuals.
There was no Netflix deal. Of course, there was no Netflix as well when he left, but it is a very different model for a post-presidency, and I think it highlights the fact that he's somebody who was principles-driven throughout his entire career, certainly when he pursued public service by going into the Navy and then into government as well, as the state senator, governor of Georgia, and the U.S. president. And the things that you were just talking about that really animated him over the course of his presidency and post-presidency: human rights, working as a diplomat, being very engaged with the world, and then, of course, focusing on public health as well. The work that the Carter Center did all over the world is really extraordinary by any measure. And we can't, of course, forget the work that he did for Habitat for Humanity with his wife, Rosalind Carter, thousands of homes that they built together, and the attention that he drove to that organization over the course of his post-presidency.
Yeah, it's pretty incredible. And we'll be hearing about those stories in depth from the individuals who knew him well today, who knew him best. President Joe Biden will be giving this eulogy. We know that those two have forged quite a close relationship. I mean, Biden was in the Senate when Carter was presidency. We're also going to be hearing from his grandchildren. And I think that's going to be really important in terms of those years following the presidency and what he cared about so much from a humanitarian point of view. And then, of course, individuals that worked closely with him, and even his foreign policy. It stemmed from human rights as the base of foreign policy, something that I actually echoed into the Biden administration.
Absolutely. And you bring up his relationship with Joe Biden. I think Joe Biden was 33 when he began working for the Carter campaign, so they have an incredibly long history together. Stuart Eisenstadt's another person who's going to speak today. He, of course, was his domestic policy advisor during the Carter administration. Really, what's so fascinating and highlights the incredibly long life that Jimmy Carter led is that we'll hear two eulogies today that were written by his close friends, the former Vice President Walter Mondale and Gerald Ford, who became a friend post-presidency. Their children will actually read those eulogies today because he outlived them. But again, we're going to get a very full measure of him, yes, as a public servant, as a politician, but I think as a person as well. And again, what we're seeing here on the screen, and to kind of explain to those who are listening on the radio, is his coffin being taken down the steps from the Capitol. He was lying in state there for several days. I actually went there yesterday, and there were a line many hundreds deep of people right in front of the Supreme Court to get into the Visitor Center and to go into the Capitol Rotunda. And over these last couple of days, thousands came through to pay their respects and sign a condolence book for the former president.
So it'll be about an hour until the actual state funeral begins in earnest, but there will be a ton of remembrance and a procession that will be happening from the Capitol to the National Cathedral. And then what is really so poetic, as I started, is that then he makes that journey back to Plains, Georgia, where it all began for him. You mentioned Stuart Eisenstadt, which is very interesting because yesterday we talked to David Rubenstein on surveillance, who was his deputy. And David Rubenstein really wanted to talk about, this was an individual who was very popular, who came in post-Watergate scandal, that the nation was really hungry for something new, this outsider, this maverick. Then his presidency, he wasn't so popular. He dealt a number of blows, especially in the foreign policy, the global stage. And now he's being remembered as extremely, extremely popular individual. And these are just from the people who worked with him day in, day out, and really got to see how he maneuvered behind the scenes.
I think that we're going to hear some of that today. We can talk more about it in detail with the guests who are going to join us over the course of these couple of hours. But I think there's a tendency after his presidency to think of him as not a very shrewd politician. And I think what we've learned and maybe obfuscated is the fact that he was quite savvy politically. I mean, again, he served in the Georgia State Senate, had one term as governor of Georgia. Of course, he was term limited, but then made this kind of improbable run for president. He wasn't just counted out; he wasn't even on on the charts. He was somebody who saw this opportunity. And Dean Rusk, who was the Secretary of State to Presidents Johnson and Kennedy, made this decision to go down to Georgia and kind of say to Jimmy Carter, Governor Carter at the time, that he thought that he had a possibility of winning this race. And he waged this very grassroots campaign and found a way to kind of weave this tapestry together within the Democratic Party and to pull in parts of the country who hadn't supported Democrats in many years. He was incredibly popular among black voters, both in the South and the North, and really established this new definition for the Democratic Party. I think that we've had a lot of time for hindsight to look at his foreign policy and his domestic policy, and it's something that I think is still hotly debated, but I think what can't be disputed is his level of personal engagement with these issues and that policy portfolio really across the board. He's somebody who read all the reports, prided himself on doing that, and really wanted to familiarize himself and do the work. And I think it can be debated sort of what was effective and what wasn't. As you say, he was dealt some bad hands. But again, I think there have been many decades now to kind of assess the efficacy of that presidency.
Yes, absolutely. And so now we do see that his casket is now been in the hearse, and he will be driven, Jimmy Carter, 39th president, to the National Cathedral, where he will be remembered.
And you see all of the dignitaries lining the stairs there to the Capitol. This military honor guard surrounded him in the Capitol Rotunda yesterday. It was really extraordinary to see them surrounding the coffin in that incredible space. Of course, there's the fresco of George Washington being elevated to heaven above it. It was just a profoundly moving scene, fraught with symbolism, of course. And I think we should just note the fact that it's rare that we see something like this, a state funeral like this. Of course, George H.W. Bush was the most recent, but it's something that is done by ritual. When it does happen, it's happened to kind of specifications and standards that have been passed down for many decades, and it's extraordinary to see.
And a lot of people don't realize that this has been rehearsed and practiced hundreds of times. But the fact is, people did not think he would live as long as he did. He is actually the longest living president of the United States we have ever had, dying at 100 years old.
So this hearse is going to make its way across the city to the Washington National Cathedral on the other side of Washington, D.C. Our colleague Tyler Kendall is there at the National Cathedral. And Tyler, first of all, just set the scene for us there. This is a funeral that's scheduled to get underway at 10 o'clock Eastern Time. What's the scene there at the cathedral and outside of it?
Yeah, good morning, David. The mood is incredibly solemn here at the Washington National Cathedral. A law enforcement official on the ground tells me that they are expecting 3,000 people to attend the service today. And as people start to file in here onto the grounds, there is this sense of quiet in anticipation of that motorcade making its way up from the U.S. Capitol. Now, security is incredibly tight. We can confirm that all 5 living U.S. presidents will be in that building behind me. This is an incredibly rare occurrence. As you mentioned, the last time that happened was in 2018 during George H.W. Bush's funeral here at the National Cathedral. We are expecting President Biden to deliver the eulogy, as well as expecting to see many members of his cabinet, as well as members of Congress on both sides of the aisle as people flock here to the Washington National Cathedral to pay their respects to former President Jimmy Carter.
And Tyler, what are we expecting to hear from President Biden today, who we know has been working a very long time on this eulogy?
Right, President Biden revealed that years ago, former President Jimmy Carter had asked him to deliver the eulogy. And on the night of Carter's passing, President Biden delivered remarks calling him a great friend and a man of, quote, great character and courage. He also went on to tell that story about how he was the first sitting senator to endorse then-candidate Carter's bid for the White House in 1976. So we likely will hear many of those same stories about their friendships, but also potentially stories about his time in office. If we look at the eulogy that Vice President Kamala Harris delivered while she was at the U.S. Capitol earlier this week, she spoke about what she called forward-looking policies under the Carter administration, including his establishment of the Departments of Energy, Education, the Federal Emergency Management Agency. And then likely, as you have been talking about, how he has been most remembered perhaps for what he has done post-presidency, having the longest post-presidency of any former president. That was really the topic of some of the other eulogies that we heard earlier this week, including by Senate Majority Leader John Thune and House Speaker Mike Johnson.
Tyler, if you would just put what we're going to watch unfold today in kind of the broader perspective of this week, and it really has been a week in memoriam for the former president. We were talking just a moment ago about what happens after this, how his body will be taken to Georgia, of course, his home state, to be interred. But there have been honors both there and here in Washington, D.C. over the course of the week.
Right. Well, former President Jimmy Carter earlier this week was lying in state at the Georgia Capitol. He then came down to the U.S. Capitol on Tuesday, where members of the public and also members of Congress could come and pay their respects. And it is interesting to think about how this week actually started with January 6th, right? And the peaceful transfer of power here in Washington. And now we are about to see all 5 living presidents in the same room paying respects to former President Jimmy Carter. And I think oftentimes, sometimes it can feel like moments of unity are rare here in Washington, but then you have events like this which are bringing together the bipartisan parts of this government to remember a former president.
It's a great point to end on. Tyler Kendall, thank you so much for that insight outside of the National Cathedral as we await for the full ceremony, the funeral for Jimmy Carter, the 39th President of the United States. It's a great point Tyler brought up. These are moments in American history where it is time and space to reflect, put the politics aside. And we did see that a little bit yesterday as well when President Trump, former President Trump, going to win future President Trump, he's the president-elect, he'll be back in just over a week to be inaugurated. He also went and paid his respects.
He did, and I think it's something that we should consider kind of in the full sweep of Jimmy Carter's legacy. I mentioned a moment ago he developed this friendship with Gerald Ford, somebody against whom he ran, of course, when he was running for president. They became friends after a trip to Egypt for a state funeral and really forged a post-presidency friendship that is unique. I think, yes, we've seen President Clinton, of course, befriend former, now late President George H.W. Bush, but the kind of degree to which these two leaders and former rivals were friends is something I think to be admired, and is something, of course, we'll be paying attention to as we see those who are in attendance at this funeral filing into the Washington National Cathedral. To have 5 living former presidents there is a rare thing, and so we'll be paying attention, of course, to sort of how they're interacting with one another.
It's a great point about Ford. Their friendship is very interesting, given the fact that these were these two massive political rivals, and I believe it was Anwar Sadat's funeral in Egypt that they were both going to, and they realized how much they actually had in common. What is interesting, though, of course, is that Carter is very outspoken about a lot of people you're going to see today, notably Bill Clinton, President Bush, especially about the war in Iraq. So what's interesting is about Ford also, of course, came before Carter. So a little bit harder for him in those 44 years that he was there, you know, criticizing potentially who had the bully pulpit and the power to criticize him. But it does show that, and I think President Trump actually spoke about this exclusive club and how there really is only a handful of people that understand the pressure, the anxiety, and how important that role is for the nation.
Yes, give credit where credit's due. I mean, the former president, soon-to-be president, once again did post about President Carter when he passed away, I think, which was a fairly genuine and straight ahead and kind of formal appreciation for him being a member of the club that you're describing just a moment ago. And going back to that flight, I think it took a lot longer to fly to Cairo and back than it did today. So they had a lot of sustained time together. But what they shared was this kind of mutual political enmity towards Ronald Reagan, of course, who was an adversary of both of them. And I think that's kind of what animated them and kind of forged the friendship to begin with. But I think they found common ground, yes, in some policies. But as you're talking about, Anne-Marie, I think it's just the experience of being the President of the United States and how limited a shared experience that is.
Yeah, and the role it is, not just for the nation, but really for the world. And we want to now bring in Daniel Fried, is the Distinguished Fellow at the Atlantic Council, of course, also former U.S. Ambassador to Poland and former Assistant Secretary of State for Europe. Ambassador, thank you so much for your time. You first joined the State Department under Carter.
I did.
Just give us a sense of what this moment means for you today and reflect a little bit on what that time was like.
In the mid-1970s, 1977, Carter becomes president. There was a sense after Vietnam, loss in Vietnam, after Watergate, that the United States was on the decline. We were losing the Cold War. Our adversaries were going to outmatch us. Carter helped turn that around. And I witnessed the impact of his human rights policy, which was dismissed, even derided at the time by the Foreign Service professionals, by superiors, as this silly, pointless posturing. But Carter was not merely right on moral grounds by putting the United States behind the democratic dissidents in the Soviet Union and Poland and other countries. He was strategically right, because he put us on the side of those fighting for freedom. And that turned out to be critical. The rise of solidarity in Poland, which led to the downfall of the Iron Curtain and the U.S. success in the Cold War, started under Carter. He meant it. It was a policy both moral and strategic. And I want to make the point that the notion that foreign policy has to be tough-minded and that morals and values have no proper place is nonsense, but don't take my word for it. Look what Carter did. He put us on the right side of history and advanced U.S. interests and values at the same time. That's quite a legacy.
Ambassador Fried, as we watch the motorcade making its way now off the Capitol grounds to the Washington National Cathedral, I wanted to ask you just about his relationship to his advisors. So, of course, his national security advisors, Zbigniew Brzezinski, chief among them. I think he took a lot of flack early on as somebody who was from Georgia, a governor, didn't have a lot of experience in Washington. From whom was he taking advice? How did he develop the kind of corpus of foreign policy perspective that he did over the course of his administration?
Well, full disclosure, Zbigniew Brzezinski was my professor and later my friend. Brzezinski pushed the human rights policy for strategic reasons, but Carter was the one who understood it. And it was Carter at Camp David, not Brzezinski, who was responsible for the success. That was a very big deal. Think about where the Middle East might have been had Clinton succeeded when he tried at Camp David, and he got very close. But Sadat was able to close the deal. Arafat wasn't. But this was Jimmy Carter's virtue, his attention to detail, his relentless focus, his unwillingness to consider politics or appearances meant he was willing to take a roll of the dice at Camp David, and it worked. Other presidents would have been more calculating. You can argue that Carter had the virtues of his vices. He didn't pay attention to politics, and sometimes that hurt him. In fact, I think it did. But in this case, it was brilliant. He landed a great success.
When it comes to other presidents potentially thinking about the politics of the moment and what they put their emphasis on, especially when it comes to things like foreign policy, I think of all the time and effort he spent with the Panama Canal treaties. And he really wanted to get SALT done with the New START, the START done.
Right.
Yet he wasn't able to get that over the finish line. Do you think he emphasized some foreign policy over others where maybe he should have used time differently?
Well, what Carter tried to do was continue détente with the Soviet Union and push a human rights policy. And one of those policies worked, the other didn't. But the failure of détente wasn't on him. It was on the Soviets. They were ultimately not interested in détente. They were interested in aggression. And when the Soviets invaded Afghanistan in 1979, Carter turned. The Panama Canal Treaty, well, people are realizing now what an achievement that was, now that President-elect Trump has called it into question. The fact is...
But Republicans have called it into question for years. One of the reasons why
some have,
is also because of John Wayne, right?
John Wayne supported the Panama Canal
No, I know.
Treaty.
He helped Republicans
That's
get
right.
along
He gave
the line.
them cover. So a lot of people did. The Americans should recall that in 1964 there were big riots in Panama, anti-American riots over the canal. Jimmy Carter realized that if we try to keep the canal against the will of the Panamanian people, it's going to become a liability, it's going to become a target, it's going to become a problem. So he negotiates the treaty, and basically it's been an entire generation of no problems. Now, if Trump has difficulty, if he's complaining about some of the terms, well, deal with that. I don't think his complaints have merit, at least I've not seen that they have, but the idea that the United States would do what? Invade Panama? Go to war? Trump said he wanted to avoid wars. Well, he's threatened a couple of them just in the past days. So you can see that Carter invested a lot, took some heat for doing so, but was right.
We're hearing the sounds of the Marine Corps Orchestra in the Washington National Cathedral now as the motorcade makes its way to there. And Ambassador Fried, I wanted to ask you about somebody else from whom we're going to hear today. That's Ambassador Andrew Young, who, of course, was named by President Carter to be his ambassador to the United Nations. And we were talking about his human rights record. Something that he was very adamant about was sending Andrew Young and other members of the administration to Africa to end whites-only rule in Zimbabwe and Namibia. Talk a bit about the breadth of his interest in foreign policy. We could talk about China as well, and he gave a lot of due deference to President Nixon in the work that he did to reopen China. But he had a very broad remit. We've talked a lot about Europe, to some degree about the Middle East, but his foreign policy was multifaceted, to say the least.
It was, and he built on President Nixon's opening to China. in a constructive way. We forget how much continuity there is between administrations. He was wise to do so. He did so for strategic reasons, for practical reasons. Now, it turns out that some of our assumptions about China haven't been borne out, right? It hasn't become a responsible member of the international community. But in the 70s, it was worth making that bet, and that bet paid off for quite a while. You know, it paid off until it didn't, yes. Right? But still, foreign policy is not forever. He continued Nixon's policy. It was the right thing to do. He pushed for an end to white rule in what was then Southern Rhodesia, now Zimbabwe. President Reagan continued that policy, maybe inconsistently, but he did. And Reagan continued Carter's policy of support for human rights in the Soviet Union and the East Bloc, which should be recognized, right? I mean, Carter from the center, Reagan from the right, forged a new U.S. consensus that our strategy should be informed by our values and that our interests will thereby be advanced. So this was solid stuff. Carter packed a lot into his 4 years as president.
When you think about what you want people to remember from Jimmy Carter, most Americans will remember the Iranian hostage crisis.
Yeah.
It gripped the news every evening.
Sure.
When that happened, American journalists all went to Tehran, and they were on the evening news every single night discussing about these more than 50 Americans that were held hostage in that embassy, that I've actually been to that embassy. It is now called the U.S. Den of Espionage in Tehran. Shocking scenes for your final year of office. Most Americans take that with them, but you know more of his foreign policy from a behind-the-scenes vision. What do you want Americans to remember him by?
He should be remembered for his successes. The failure in Iran was not just on him. It was the Nixon administration who decided that the Shah of Iran was an ideal ally. And we put our faith in him. The theory was, well, let's not talk about democracy, let's talk about regional strongmen. Now, that was a spectacularly bad decision. And it was made under the Nixon administration, and Carter suffered the consequences. You could debate whether he should have invited the Shah of Iran to the United States after he was deposed. Probably the wrong call. I knew some of the hostages. Tehran, I looked at an assignment at our embassy in Tehran, and I could have taken it, in which case, 77, in which case I would have been one of the hostages, for sure. So it's not abstract to me. The world's a dangerous place. Any president is going to have foreign policy failures, and if you don't recognize that, you're kidding yourself. Iran was one of Carter's failures. Camp David was a success. The human rights policy was a success. And Carter's decency as a person, a decency that he brought to his work, is something that people scoffed at, right? The sanctimonious and cardigan sweaters and talking about sacrifice. But hey, he was right about solar panels now, wasn't he? Right? He was right about a lot of stuff. And decency, well, decency in politics is sort of like good health. You generally miss it only when it's gone.
Mr. Ambassador, thank you very much. Wonderful to see you, as always, and on this day especially. That's Atlantic Council Distinguished Fellow Daniel Freed joining us here in Washington, D.C., and we're watching the beginnings of the state funeral for former President Jimmy Carter. We've been talking about how rare these moments are when so many dignitaries are gathered in one place, and we saw just moments ago former Vice President Mike Pence.
James Earl Carter Jr. will begin
talking with former Vice President Al Gore. We saw Supreme Court Justice Amy Coney Barrett as well. So, Anne Marie, it is a real mix of people who are currently working jobs here in Washington, D.C. or have been here before. A magnet to get them all together again.
And people who have also been critical of Jimmy Carter and his 4 years of office. But there you see now Senator Vance, who is soon to be the Vice President of the United States, along with newly elected Pennsylvania Senator Dave McCormick and their wives. They are taking their seats. You see a number of individuals coming to pay their respects to this man. And I think Ambassador Fried put it very well. This was a man that, whether you didn't disagree with him politically, you thought he was a decent individual. And I go back to him on the campaign trail when he first wanted to become president. That is what he tried to really instill in American voters. I will not lie to you, I remember him saying, in the course of my reading over the last few weeks, to these New Hampshire voters, I promise to not lie to you. It's going to be tough, but I'm going to do my best, and I will be honest and forthright. And I think he tried to do that throughout his administration.
Tried to do it, I think was largely successful. And I remember reading early on in that campaign a level of anxiety or nervousness among some campaign advisors that to make a promise like that, you have to keep it or you're going to get caught breaking it. And I think as we've seen here, he's somebody who was very principles driven and stood by that. And I think we'll hear more about that today, again, from Ambassador Young and others. And as we pay attention here to what's happening within that cathedral, the motorcade making its way to that site in Northwest Washington, and just moments ago past the White House that Jimmy Carter occupied for 4 years, now making its way farther into Northwest to where this funeral will take place, Anne-Marie.
Yeah, absolutely. It's absolutely a beautiful service, especially interesting for someone who really hated the pomp and circumstance of Washington, D.C. Notoriously, he got rid of, there was a presidential yacht at one point.
Sold it off.
Sold it off.
Yeah.
There's lots of stories about how he would invite members of Congress to come in for breakfast meetings, and they would complain, where is the full spread?
Where's the hot meal?
Where's the hot meal? This is just some croissant in Danish. I want something more. But that's who he was, an individual. And now you just see President Biden's son, Hunter Biden, who is, and Al Gore and Vice President Pence sitting in their seats. To your point earlier, David, a lot of individuals who don't agree on politically, fierce political rivals, all here to really honor the 39th President of the United States, Jimmy Carter, remember his legacy.
Something else he did away with famously were the musical honors. When he'd walk into a room, he did want to hail the chief to be played. I believe it will be played today, so there'll be a special exception made here on for the state funeral. I want to bring in now Michael McKee, our colleague in New York. He has, of course, covered politics for a very long time. Did not cover the Carter administration, I should say, and Mike will smile at me saying that. But, Mike, what are you thinking about in this moment as you watch all of this very poignant pomp and circumstance take place?
Well, you know, it's very interesting how long Jimmy Carter lived and how much time that gave historians and regular people to reassess his legacy. He sort of came to office, dealt a bad hand. You've heard that cliche before, but he inherited an economy that was getting into trouble because of the Vietnam War hangover, because of Richard Nixon's decision to take the U.S. off of the gold standard. And he didn't handle it well in the beginning, but then you look at what he did almost at the end of his term. He appointed Paul Volcker, and that's turned basically the economy around and created an entirely new story for the U.S. economy. It was also a time of stagflation when the economy wasn't growing, and that turned around under his successor, Ronald Reagan, when Reagan cut taxes and people started spending a lot more money. So he was kind of an interregnum, the stagflation years, you might call them, and it was a difficult time for him. And of course, as you've been talking about, a lot of foreign policy problems during that period that really weren't his fault, but he ended up having to deal with them, and whether he did or not was an issue. The other thing that I was thinking of is the last 4 presidents who have died lived into their 90s. So there is something about the White House that actually may be a little bit good for you, and we'll have to see. I mean, hopefully nothing happens to Joe Biden very soon. He's now the oldest living president, so we'll see.
Maybe there's something in the water,
yes.
Mike. I've been thinking a lot as we prepare to cover President-elect Trump, and he wants to Dogeify the government. Actually, Jimmy Carter worked hard to try to get rid of regulation. He wanted to deregulate the airlines. He wanted to deregulate railroads. But a lot of that credit was given to President Reagan.
That's an unusual situation because Reagan obviously got the publicity as being the deregulator, but it was Carter who put it into place, particularly the airlines. That changed the entire airline industry, but he also pushed through deregulation of the trucking industry and of railroads, as you mentioned. And that's had a major impact on costs for overall goods in the U.S. That you put that into the mix with what Paul Volcker did, and the legacy legacy there is very strong. Alfred Kahn was appointed to the Civil Aeronautics Board by Jimmy Carter as the chairman, and he led the deregulation of the industry that led to the growth of a lot of new airlines, including one named after a former president who may be taking office again. Didn't last too long, but Donald Trump had his own airline, in part thanks to Jimmy Carter.
Mike, I just want to talk a bit more about the naming of Paul Volcker to that position, and we were talking about the grief that he got from some members of his campaign staff when he made that promise not to lie, promise to always tell the truth. There was a good deal of discord and dissent among his advisors in the White House when he met with Paul Volcker, who, of course, was an economist, made no secret of what he intended to do if he were to get the job as Fed chair. What was it that was persuasive to Jimmy Carter about Paul Volcker?
I think you have to put a couple of things into that. One is that Volcker was a commanding presence. The man was 6'7", very big man, deep voice, smoked cigars, and gave the absolute impression that he would be in charge. And that's something that people don't really think of that often, except maybe when we change Fed chairman, what that person's demeanor says to. And Wall Street, remember, had, well, you won't remember, but at the time, Carter churned through two Treasury and Fed secretaries who'd flipped jobs. G. William Miller had the shortest tenure of any Fed chair, and Carter was looking for somebody who could come into office and command the economy, basically. And he got what he wanted in a man who said that he would do whatever it took to bring inflation down. We'd gone through the whip inflation now years with Gerald Ford. Didn't work. Americans were very upset, as we've learned recently, about inflation. It got to 15% during Carter's presidency. So he was looking for somebody to do something about that, and that is one of his legacies, is that he picked somebody who would do something at Carter's own political risk.
Absolutely. It was at his own political risk. Bloomberg's Mike McKee, thank you so much. You know, Mike brought up the energy crisis. I think that's what most people, at least when I talk to my parents, when I talk to individuals who lived during the 1970s, that's what they remember, these gas lines. And he was dealt that coming into office, but also had his own energy issues. I think most people remember that speech. He didn't even use the word malaise, but they remember that feeling of this idea of consumption. Other speeches, you know, put on a sweater, take more public transport. But that goes back to the honesty and decency of him speaking from the heart, maybe not doing what's always politically appropriate or needed at the time, but almost trying to level with the American people.
You bring up that so-called malaise speech. I mean, just the story of how that came about is so fascinating as well. So we're in the midst of this energy crisis here in this country, and he kind of absconds to Camp David and gets introspective, to say the least, thinks a lot about how Americans are feeling at the time, how they're reacting so negatively to what he has to say, and then delivers that speech, which is kind of part and parcel with the string of speeches you've been talking about. He, in the cardigan, in the Oval Office, kind of cosplaying FDR a little bit there with a fireside chat, but wanting to be forthright with Americans about what was going on, and then kind of getting into broader issues that he thought were besetting America at that point in time. And of course, after that, making kind of radical decision to basically get rid of most of his cabinet and kind of start fresh, admitting the fact that things weren't going the way that they should have been. You're listening to special coverage, watching special coverage of the state funeral for Jimmy Carter here as David Osborne plays on the piano here before that service begins in earnest. And we continue to watch sort of who's filed in to the National Cathedral here. And it has been a mix of sitting members of the U.S. Supreme Court, members of the families of presidents past and present. I saw members of the Kennedy family there just a moment ago. Vice President Mike Pence is there. Vice President Al Gore as well. Those formers sitting right next to each other there on a pew toward the front of the cathedral. This is a Washington parlor game, not to be crass about it, but to see sort of who is invited to and shows up at something like this. And I just can't emphasize enough kind of the specialness and the rarity of having this many dignitaries past and present in one room in this storied cathedral as we see the hearse carrying President Carter making its way to Northwest Washington, D.C., to that cathedral.
And absolutely, this is a moment where politics really is left at the door. And there is this moment to honor the legacy, even if you didn't agree with this individual, honor the legacy, especially for someone like Jimmy Carter. You know, we talk about a lot of blows that he was dealt. He also came into office where there was very high inflation. Americans were still reeling from what happened with Vietnam. There was high crime. But he really is remembered, and as David Rubenstein, who worked for him, said to me yesterday, how popular he was in the 44 years after. All the work he did on the humanitarian front, on global health policy, on just making sure that he can go out and be a voice for democratic process, for fair and free elections, for Habitat for Humanity, for the 77-year marriage with his wife. You know, you brought up that speech. He was someone who gave her 2 cents on whether he should do things or not. I know a few times she said, maybe you should wait for a second term for something so controversial. You know, someone who he really relied on. But that is who, when you hear from his grandsons and when you hear from President Biden, that is the individual, the man they will shed light on.
The hearse there approaching the Washington National Cathedral now, and you see more members of the Military Honor Guard out in front of the cathedral as that hearse comes to a stop, and Jimmy Carter's remains will be brought inside. In just a few moments here, you know, you bring up the fact that he was somebody who was kind of disinterested in politics at the time. Again, we can talk about him as a political animal, but he was fundamentally driven by a desire to do the right thing. You also bring up the fact that he would take his wife's counsel. I've been reading some of his many autobiographies, and he wrote a lot of them over the course of his long post-presidency. But he said one of his greatest regrets was when he decided to make that first run for state senate in Georgia. He didn't consult her before doing that. There was one other moment that caused friction between them, and that was he was in the U.S. Navy with a rather plum position working on the nuclear submarine fleet, and he decided after his father's death he wanted to leave the Navy and return home to planes. And Rosalind Carter, who I think was happy to leave that town at that stage in her life, chagrined at the prospects of moving back there and returning to her life in that small town in Georgia. But in fact, they did. But they had a very close relationship. And going back to the campaign, they consulted with each other constantly and really worked hard to cultivate support at a very grassroots level in Iowa, in New Hampshire, working hard to remember names and return to talking to people that they met there while they were on the ground. So again, kind of mobilizing this real grassroots effort that, of course, has been emulated, but was really something special and unique at the time, the doggedness with which they campaigned.
Yeah, absolutely. And just speaking of the First Lady, Rosalind, this individual who wasn't just there for the pomp and circumstance, that I think as President Biden has talked about, how he has worked with his wife, Dr. Jill Biden, that final moment individual you look at in the room before you go out and make a big decision. Over the course of my research of Jimmy Carter, I was looking at how Rosalind Carter had said to him, wait for a second term about the Panama Treaties. It was too controversial. But at the end of the day, he, of course, went with what he thought was right. You know, we talk about the fact that he was, looking back historically, a very shrewd politician. He was. In many ways, it was his way at times or the highway. And we see that in a number of where that stubbornness maybe actually helped him in something like Egypt and Israel. Maybe that stubbornness actually didn't help him in some, definitely domestically, in his fights and battles with legislators on the Hill.
We're watching the Carter family disembark from a bus that took them to the service, and many members of the Carter family are there. He had a huge family, many grandchildren and great-grandchildren as well. I thought a great anecdote was, I talked about the Capitol Rotunda, the kind of glory of that space. When they had that service in there with the leadership of the Senate and the House, many seats were filled by members of the Carter family who were there. I know that our colleague Tyler Kendall is watching all of this unfold from the footsteps of the National Cathedral as well. Tyler, just walk us through what you're seeing here as we wait for that hearse door to open and for the casket to be moved into the cathedral.
Yeah, hey, David. So you can see the hearse carrying the body of former President Jimmy Carter over my shoulder. His family is starting to enter into the cathedral. We know they've been staying at the Blair House across the street from the White House as formal guests of President Biden. There's also a military procession that has been accompanying him as we wait for the service to start. Now, we can confirm that President Biden, as well as President-elect Trump, are both inside the cathedral. The bells actually tolled here at the cathedral when President Biden's motorcade arrived. Of course, we are waiting for him to deliver the eulogy, as well as we are expecting members of his family to also participate in this service, notably 3 of former President Jimmy Carter's grandsons. We are also expecting to hear from the son of his predecessor, President Ford. He is also expected to give a tribute here at the Washington National Cathedral.
Pretty incredible, Tyler, and you just being there outside the National Cathedral. Give us a sense of what you see right now. How large and important and significant is this ceremony right now?
Well, Anne-Marie, I did talk to a law enforcement official here on the ground earlier who told me that they were expecting 3,000 people to come in for this service. Now, of course, this was dubbed a special security event, which meant that it's not just the Secret Service overseeing this, but that they also called in law enforcement agencies from around the country, considering that we have 5 of the living presidents in the cathedral behind me. There are motorcades lining the street, but there are also viewers, members of the public, who are coming up to the security barricades, trying to get a glimpse inside here at the Washington National Cathedral. We know that they were lining that procession street, but they are here holding signs, even I've seen in some cases, for former President Jimmy Carter.
Tyler Kendall, stay with us. I know it's cold out there. It is a beautiful day here in Washington, D.C., but in the 20s, and you're doing yeoman's work there, standing sentry outside the Washington National Cathedral, and you can kind of hear the echoes of some Wagner playing in the cathedral, just a really eclectic selection of music here before this service begins. And we know that President Carter was a real fan of music in all genres. There was a really amusing anecdote in one of his memoirs about when he went to interview for a job in the nuclear submarine program in the U.S. Navy. Admiral Rickover, who is a notoriously gruff individual, grilled him for about 90 minutes on all manner of topics and asked him what kind of music he listened to. He allowed that he listened to a lot of classical music when he was at the Naval Academy. He and his roommates bought opera. And Rickover really drilled down on sort of what his favorites were. Wagner was high up on the list. So what we're hearing over the course of this morning are some of his favorite musical selections as we get to the beginning of this service in earnest, Anne-Marie. So again, we're waiting here, watching this scene outside the Washington National Cathedral. Again, an array of military honor guard, along with members of the Carter family, as we wait for the body of Jimmy Carter to be brought into the cathedral.
And you talk about the music we're going to hear today. The musical tributes are pretty incredible. A long list of besides, of course, the obvious Marine Chamber Orchestra, the Armed Forces Chorus, of course, the Coast Guard Band, but also Garth Brooks.
Garth Brooks, Trisha Yearwood as well. I believe husband and wife, and we were talking just a little while ago about Jimmy Carter's post-presidency service to Habitat for Humanity. He and his wife built thousands of houses together over the course of their lifetimes. And Garth Brooks, Trisha Yearwood, worked with the Carters on many of those homes. They've kind of been crusaders for the work of that organization as well, and got to know the late president and his late wife through that work. So we'll hear from them during this service as well today.
And what's pretty incredible about Carter's time at Habitat for Humanity, it wasn't just this advisory role I'm going to take on and go cut ribbons. This was a man who actually wanted to go on missions, build homes, hammers, nails, step-by-step approach to this. And this is what you talk to people who, not just historians, people who worked for him, this is what they say is what Americans love about Jimmy Carter. He left the office not to enrich himself, but to enrich people around him.
Yeah, I mean, you look at sort of the facets of his post-presidency, and yes, he went to Emory, he built the Carter Center, worked very closely with it to sort of advance its goals, determine what those goals would be, to work on issues of public health and diplomacy and democracy building worldwide. Habitat for Humanity was not his organization. It was not a Carter-founded organization. It was one that he really admired and really admired the work of. And I heard him say that what he really admired about it is that people of means worked directly with people who were not of means and needed something so fundamental as a roof over their heads. And he thought it was an incredible opportunity and incredible apparatus by which you could get those two types of people together. But you're right, he was out there with the hammer and nails. It's funny to go back and revisit interviews with him, many of which took place on these sites where he was building homes. Yes, here in the United States, but around the world as well. And there was many a correspondent who joined him and his wife there and had to don a hard hat or a work belt and hammer some nails themselves to get those interviews. But it was something that was so clearly important to him and something that took many weeks out of each year he spent building those homes for Habitat for Humanity.
And some historians talk about when he left the office at a very young age, comparatively to a lot of presidents. He was shocked that he lost the election, and that election was a landslide. So he almost was depressed, going back to Plains, Georgia, and didn't know yet what he would do. And I believe it was the death of Anwar Sadat, someone that he admired, someone that put politics aside at the end of the day, finally came to an agreement with the Israeli Prime Minister to forge this peace, that he said, I actually want to go donate and give the rest of my life to service that I believe in, to things that inspire me, to doing better in this world. And that's what he did. But that was really the individual that sparked that was the life of Sadat, who, of course, he met while he was in the Oval Office.
Bloomberg's Mike McKee is still with us, and Mike, I'd love for you to pick up on that, what that interregnum was like, and when we sort of began to see the contours take shape of what this post-presidency was going to be like, and that achievement, that peace achievement in the Middle East between Israel and Egypt was so important, of course, personally to Jimmy Carter, but important geopolitically, and as Ambassador Daniel Fried was saying just a few moments ago, continues to have this kind of lasting effect on the region as a whole. Talk a bit about when you began to see an unmoored Jimmy Carter leaving Washington earlier than he wanted to, find his footing and begin to sort of establish himself as this kind of diplomat, democracy crusader, humanitarian post-presidency.
Well, it's interesting because he went back to Plains, Georgia right after he lost the election and Ronald Reagan was inaugurated and was very depressed and felt maybe he hadn't gotten a fair deal. And it took him about a year, at which time he discovered his peanut farm was in bankruptcy and he had to sell off part of it. And he decided he didn't want to just sit there and farm peanuts again. He wanted to do something useful, in part driven by that Middle East peace deal and the idea that maybe other politicians wouldn't follow up on it because it obviously was controversial. So he founded the Carter Center, and that got him into a lot of different areas, including, as well as the Middle East, including work to try to eradicate diseases around the world. And he spent a lot of time as an election monitor in various countries where there was a feeling that perhaps there was some cheating going on. And he brought the credibility of a righteous American president to those elections. And then obviously got involved in other charities like Habitat for Humanity and just kept going on it. Now remember, he came to office as a very religious man, raised in the Baptist church tradition. And he continued that and became even more so, I think, in the post-presidential years.
Just quickly here, I mean, Mike talking about coming back and seeing that the peanut farm was in bankruptcy, it seems so quaint now, but President Carter, of course, put everything in a blind trust, had no visibility and all of that, and so now as we kind of look at this past Trump presidency, future Trump, things have changed radically from then.
Things have changed radically. Washington moves slowly, but in terms of this instance, things have certainly changed radically. We have seen a lot of presidents leave office and make a lot of money, enrich themselves, since Jimmy Carter. But that is one thing that is very uniquely to him. When you talk about him in the post-presidency years, of course, we'd be remiss not to mention that, of course, he received the Nobel Peace Prize. And when they talked about this Nobel Peace Prize, they talked about his decades of untiring effort to find peaceful solutions to international conflicts, to advance democracy, human rights, and to promote economic and social development. It was interesting because, of course, he got that Nobel Peace Prize at a time as well where he was really needling President Bush, Mike, about what was going on in Iraq.
Yeah, it was interesting timing, and people have accused the Nobel Committee of playing politics, and this was a case in which people thought perhaps there was some, that going back to honor Jimmy Carter after he'd been out of office and after his work had been done primarily in the past, compared with what was going on with the administration at the time, was maybe a little political shot, and the Bush family didn't take it particularly well at the time. I was there in the White House then, and it was an interesting moment for Carter and Bush, but they managed to paper over differences in that, and were not the best of friends, but did have a respectful relationship going forward.
Like we're seeing members of the Carter family taking their seats there, former president, soon to be president again, Donald Trump, taking his seat in the cathedral as well. I was talking about music a moment ago. Let's talk a bit more about it because it was so critical to his campaign. He had a great friendship with Greg Allman, for instance. He was somebody who, you know, despite being a devout Baptist, as you described, really embraced the rock and roll scene as well, and they him. On that campaign, he would go out to rock concerts, keep his remarks short at the beginning, which I think was shrewd, but got a lot of support through embracing popular music at the time.
Yeah, he was seen as sort of a rock president. When he was governor in 1977, he invited Bob Dylan to the governor's mansion after seeing him in concert, and they started to get along very well. The Allman Brothers, South Carolina band that played all the time in Georgia, and they attracted the attention of Jimmy Carter's kids. And he ended up inviting them to the governor's mansion. And the story is when Greg Allman got there, Jimmy Carter came out, wasn't wearing a shirt. He'd been working in the yard. And Greg Allman thought, who is this homeless man that is hanging around the governor's mansion? They became friends, and the Allman Brothers did concerts for him. He also got help on the campaign trail from Paul Simon and from Jimmy Buffett. So he was someone who fit in well. And of course, David, you probably remember the story about Willie Nelson coming to the White House and going up on the roof of the White House and doing what Willie Nelson does all the time.
Inspecting the solar panels, Mike, I assume.
Inspecting the solar panels. And the story Willie Nelson told was that he went up there with a kitchen staffer from the White House. And later on in one of his biographies, as you were talking about, Jimmy Carter wrote, no, he went up there with my son Chip. So Carter was probably willing to forgive and forget a little bit of the drug issue in those days.
Mike, we just saw President Obama take his seat. He's now speaking with President Trump, sitting next to President Trump, and now soon to be future president. He's now the president-elect, Trump, First Lady Melania Trump. We also did, David, I know you noticed this, when President Trump came in, him and his vice president, who do not see eye to eye anymore, also shared a handshake.
We see George W. Bush, the former president, coming in with his wife, Laura. No handshake for former President Trump from those two, I'll note, as President Obama stands up as they come into the aisle. More handshakes here as we see former Vice President Al Gore standing up as well. To be a fly on the wall, to be near that conversation between the former President Obama, former and soon-to-be President again, Trump, I'd love to hear what they're saying.
Same, because I just saw a few smiles on Barack Obama and Donald Trump's faces, and I would love to know, as I think every political journalist watching this right now would love to know what those two are talking about. But now we see President Clinton and, of course, former presidential candidate and Secretary of State Hillary Clinton walking in. Handshakes going around. We'll see whether or not they decide to give one to the president-elect on the other side there. Of course, Bill Clinton and Jimmy Carter had at moments a very tough relationship. You know, you mentioned how that whole malaise speech, which didn't even use the word malaise, but it was written up in a report that was the tone and tenor of it. He actually spoke to Bill Clinton before that speech. And Bill Clinton was trying to really talk to him about the fact that the American people just right now are not feeling great. Inflation is killing them.
Yes, and Bill Clinton, then very young in his political career. I think of another moment when President Carter, post-presidency, took a sort of diplomatic trip of his own and came back and didn't seek the counsel of the sitting president, President Clinton at the time. You know, it's a frosty relationship at times, but again, as we're watching here unfold, we were talking about this earlier, the smallness of this club is something to behold, and we rarely see it with all of them together as we're seeing right now.
See right now, President-elect Trump seems to have a lot to say to President Obama, and President Obama chuckling there. To be a fly on the wall would be pretty incredible. Maybe someone near there would be willing to leak out what some of these conversations are taking place. But these moments in Washington are very important because they happen so rarely. Rarely do you see this group of people together. It's either really on inauguration, to display a peaceful transfer of power, which we will see on January 20th, or it is in moments like this to honor the legacy of the 39th president, Jimmy Carter.
Looking here inside the Washington National Cathedral, that hearse still waiting outside with the remains of President Carter in it. There are 4 vacant seats there in the front. We're going to see the current president, President Biden, make his way into this cathedral soon. I'm sure he's scheduled to eulogize the former president, President Carter, during the course of this service.
Pretty incredible, these moments right now. Pretty incredible. Tyler made a great point that President Biden, as we wait for him and he will give this eulogy, he was supposed to go meet the Pope and leave after this. He's not. He's going to be paying attention now and dealing with the wildfires that are just apocalyptic across Los Angeles. He's been working on it because he told us years ago that he was chosen. When Jimmy Carter got sick, remember, he went into hospice care.
More than a year ago.
More than a year ago. And actually his wife died before him, which was shocking to many people. And now we see the Vice President, Kamala Harris, walking in, of course, with First Gentleman Doug Emhoff. So we should be getting closer to, of course, the ceremony taking underway in full.
One tries not to read too much into each of these interactions, but we've seen some of these former leaders stand up for others and nod or shake hands with some and not others. We see there the vice president and her husband taking their seats in the first pew here, and I think it will be remarkable to hear what President Biden has to say in his eulogy. You talk about just the scope of this. I think we'll hear from Gerald Ford's son, who's going to read the eulogy that was written by Gerald Ford a long time ago. We were talking about kind of the closeness of that relationship between those two past presidents. They kind of brokered this agreement that one would eulogize the other at each other's funeral. And of course, Jimmy Carter did do that. He appeared at that funeral and delivered that eulogy. We should just take note of the fact he lived to be 100 years old. What an extraordinary thing. And he was battling brain cancer, I believe, a decade ago. So he lived a long life by any measure. Now a decade plus ago, and to be candid here, I recall hosting a live show about a year and a half ago when he went into hospice, and this was essentially, is he going to pass away soon? And he really lived for quite a long while after that.
Absolutely. Incredible life. I go back to what David Rubin signed yesterday. Very popular as this maverick outsider. Post-Watergate, Americans just really want something different. That outsider maverick appeal worked. He had a very difficult administration, incredible poll numbers when he came in that just absolutely plummeted by the end, that final 1979 year where he really struggled. And we should bring in Mike McKee to talk about this. Mike, you mentioned earlier about just the energy crisis that really tainted Carter and his leadership and, in the end, his legacy.
Yeah, that was a result of the initial war between Israel and the Middle East states and the U.S.-backed Israel, the Yom Kippur War, and the Saudis responded by putting an embargo on U.S. oil imports, and imports that dropped off, and we saw a huge rise for the time in gasoline prices. Of course, I think we saw gasoline prices rise to around $1.25, but that was big in those days. Carter was in the position of having to deal with that, and at the time, that's when we went to the 55-mile-an-hour speed limit. You had situations where people with even-numbered license plates could get gas on one day, odd-numbered license plates on another day, long lines, and then, of course, it pushed the price of energy overall up, and that was one of the reasons that we saw inflation rise so dramatically. Also, one of the reasons that we now have the core rate of inflation, because the Fed could not do anything about an Arab oil embargo, so they wanted to see what the underlying inflation rate was, and they created the core rate.
Michael McKee, never resisting the urge to mention the core rate of inflation, as we see President Biden and his wife Jill Biden coming into this cathedral. And Anne-Marie, I have to note, former President Carter was a stickler for punctuality. It was something he cared an awful lot about, wanted to show up early to events, and grew frustrated if folks were not there on time. There's a great anecdote about a reporter who had an agreement to interview him on the campaign trail. He didn't show up in time for the flight, so the president took off.
Oh, can you imagine?
He was reportedly somebody who would tell pilots to fly at a lower altitude because he didn't want to waste time on the climb both up and down. So here we are at 10 o'clock Wall Street time when this service was scheduled to get underway, and it seems like we're very close to its beginning. So maybe not right on the dot, as the former president would have wanted it, but we're seeing things move along here very close to schedule.
There's a few things that he wouldn't have loved about today. Most notably, I think, the fact that everyone is coming out in a pomp and circumstance. I think he probably would have preferred what he's going to get later this afternoon, which is that private funeral in Plains, Georgia, where really it all began for him, with the people closest to him, and in a very private, humble setting. You mentioned President Biden. I'm just reflecting on what he said when Jimmy Carter passed, that statement he put out. Over 6 decades, he said, we had the honor of calling Jimmy Carter a dear friend. But what's extraordinary about Jimmy Carter, though, is that millions of people throughout America and the world who never met him thought of him as a dear friend as well. And that's really how he would like to be remembered.
Yes, absolutely. And we talked about this, club of presidents here today, something that the former president wrote a lot about is when he was in office, the engagement that he had with his predecessors who had come to town and were, of course, entitled to get briefings on security and international relations and the latest developments from his staff. Many availed themselves of that with some regularity. President Nixon, I think, thought it was a little too nettlesome for a time and stopped doing that. But there is a level of continuity among them if they want to have it. And we see the hearse door being opened here outside the Washington National Cathedral, that flag-draped coffin that has, for these last couple of days, been lying in state in the U.S. Capitol, just a couple of miles from where this funeral is taking place.
So 2 minutes just after 10 o'clock, this funeral will be underway as they remove the remains of the 39th president, Jimmy Carter, dying at 100 years old, the oldest living U.S. president we've ever had in our history. And he will be making his way into the National Cathedral, where his life and legacy will be honored, of course, David, before going back to be interred next to his wife, Rosalind Carter, a marriage of 77 years, one that I believe he talked about, how he was so proud of, one of his greatest achievements in his life.
Yes, there were moments of strain, which he acknowledged, but indeed it was a paramount to him was the integrity and length of that relationship with his late wife, Rosalind Carter. As we see members of the military now approaching that coffin inside the hearse. And I should note there's a long list of honorary pallbearers here, most of whom are members of the Carter family. To emphasize what I said just a few moments ago, many members of the Carter family have been here in Washington over the course of this week. As Tyler Kendall pointed out, his immediate family has been staying in Blair House across the street from the White House in advance of this funeral. And you mentioned what's going to happen later today after this service takes place. The former president's remains will be flown to Georgia. There will be an opportunity for Georgians to kind of line the route through which the hearse will travel to the homestead that Rosalind and Jimmy Carter had in Plains, Georgia for so many years. It's now a protected National Historic Site, and that will be closed to the public. It'll be a private interment. But they both devoutly religious. Rosalind Carter raised Methodist, but converted to the Baptist faith, or Baptist branch of the Christian faith when she married Jimmy Carter. And of course, it was something that was so important to him, so important to them during the course of their life, and something that he had to navigate as president of the United States. I think there was a fair amount of skepticism about him and his religion early on. He was somebody who was adamant about the separation of church and state, and gave a lot of remarks when he was both a candidate and a president to emphasize that fact.
And you bring up, of course, his faith. When he was a young child, he went, of course, to Sunday school, but his father occasionally taught out. So this was instilled in him from a very, very young age. I see a lot of echoes as well when you talk about the men of this exclusive club. Another individual that is a devout religious man, Catholic, not Baptist, but is President Biden, never really missing. I don't think Biden has ever missed, as far as I've been covering him, a Sunday service. And we are waiting for Jimmy Carter's remains to be brought fully into the church. They are now, he's leaving the hearse, and we will have his life and legacy on display. You made up a great point, David. His family is really present and really in focus at this ceremony. Of course, they'll be at the private one in Plains, Georgia, but a number of them are going to be the pallbearers. We're going to hear a number of them speak today. He had a lot of grandchildren, and very close throughout his life with not just his children, but his grandchildren.
We'll hear from a couple of his grandchildren today, one of whom did pursue a career in politics for a time. He was a state senator in Georgia, like his grandfather as well. As we hear Hail to the Chief being played and that coffin being brought in to Washington National Cathedral.
You have to smile a little bit when you hear.
Yes, given that history and given his distaste for it when he was in the White House, to hear it being played here as that honor guard carries that coffin up the steps to the cathedral.
Just looking back again at President Biden, who we're going to hear eulogize his life today, what we can maybe expect for him to say, given this statement, talking about a man of great character, courage, hope, optimism, how people cherish seeing him and his wife of 77 years share this love between them, and their humble leadership is the definition of patriotism. Many Americans you speak to that were living during the Carter administration, the late 70s, early 90s, what America was reeling from. That 1979 final year of his presidency, gasoline lines, the Iranian hostage crisis, all of this really coming into the homes of Americans. But now Americans really remember him for the decades of service he gave, leaving the Oval Office.
We're watching the dean of the cathedral stepping out front with the bishop as well. I see her there as the coffin makes its way into the cathedral.
We receive the body of our brother James for burial. Let us pray with confidence to God, the giver of life, that he will raise him to perfection in the company of the saints. Deliver your servant James, O sovereign Lord Christ, from all evil and set him free from every bond, that he may rest with all your saints in the eternal habitations, where with the Father and the Holy Spirit you live and reign, one God, forever and ever.
Let us also pray for all who mourn, that they may cast their care on God and know the consolation of his love. Almighty God, look with pity on the sorrows of your servants for whom we pray. Remember them, Lord, in mercy. Nourish them with patience. Comfort them with a sense of your goodness. Lift up your countenance upon them and give them peace. Through Jesus Christ our Lord. Amen.
That was Marianne Buddy, the bishop. We're seeing another bishop, Sean Rowe, as the honor guard carries that casket into the Washington National Cathedral now.
Pretty remarkable moment, David, as we reflect on Jimmy Carter here. Now at the National Cathedral, 100-year-old president, 39th president of the United States. We will be hearing soon from the Cathedral Choir. They'll be singing the Road Home. You reflected on how so much music is going to be instilled in this service, and it's really appropriate for Jimmy Carter. I was also looking at his, I believe one of his convention speeches. He was quoting Bob Dylan in it. This was a man who just loved music and found a way to really weave it into his politics and leadership as well.
He got Dylan. They liked one another. They had conversations about all manner of things, including religion. He talked about Christianity with Bob Dylan before Dylan converted to it a few years later. So getting back to what we were talking about with Michael McKee, it's something that really animated him, both as a candidate and as the president, post-presidency as well. And so I keep thinking back on something that we heard from Ambassador Daniel Fried a moment ago, which is the continuity of administrations. We talked about Nixon's policy toward China, how that influenced Jimmy Carter's policy when he came into office. You know, this is happening at a really unique time in American history. We're in this transition period, of course. As you mentioned, the inauguration scheduled to take place in just a few days here. As we look at President Biden sitting there somberly in the first pew, you mentioned a moment ago his deep spirituality. He was supposed to be having an audience with the Pope on a trip to Italy, and by virtue of this happening, and of course the tragedy that we're watching unfold on the West Coast in Los Angeles and around it as well, that trip is not going to happen, and one has to imagine that's in its way devastating to him, because I know that it would be so important.
Absolutely. He wanted to make that his final trip, to go to the Vatican, to see the Pope as a deeply religious individual. Looking back on this Bob Dylan phrase that Jimmy Carter once quoted, he talked about America that is busy being born, not busy dying. That is the emphasis and optimism Jimmy Carter went into the White House. Very different in the way he came out.
There was a wonderful piece by Peter Baker of the New York Times that kind of centered on the relationship between President Carter and President Ford, and he said this was almost like a pre-dawn to Morning in America. That level of optimism that you're describing was really unique, and I think really welcomed by a lot of Americans after what had happened during the Nixon administration, where the politics were darker than I think that they were under President Carter. And of course, we're beset by so much scandal, so much that made people doubt the integrity of their government and of public service as well. So he represented something different, and it's something that he exploited on the campaign trail. I don't mean to say that in a disparaging way. It's something that I think he recognized, that there were a lot of Americans who were hungry for a change, wanted to have more optimism. And I think about his trajectory as candidate, president, post-president. That was something that really guided him, optimism that one person could make a difference. And we've talked a lot about the kind of political issues he faced and the hurdles that he faced. There was a stubbornness to him, but one motivated by the fact, I think, that he thought he had to do what was right, and he thought he knew what was right.
And he felt like he had a mandate.
Yes,
he felt like
absolutely.
he had a mandate to change what goes on in Washington, which is, I will scratch your back if you scratch mine. He did not want to play that game, which is why he struggled legislatively on the Hill. And really, at some point, had to come around and think about, I guess I need to do some pork to make sure I can get some of my initiatives across the finish line. It was really fascinating speaking to Ambassador Fried as well. Talk about this cornerstone as foreign policy, one of human rights. You see that echoed as well in this administration. That is something Secretary of State Antony Blinken talked about early on, and so did President Biden. Of course, the issue is you come in to the presidency, to the Oval Office, with grand plans.
Yes.
And of course, the world doesn't always deal you what you were expecting and hoping and wanting to achieve.
We're at a moment in time where there are a lot of lobbyists in this town, there are a lot of special interests, and the kind of game has changed in a really fundamental way. Something the former president was really proud of is that he didn't owe favors to anyone, and we've talked a lot about sort of that period after he left the White House and moved back to Georgia, where he's trying to figure out what to do next. He was very happy that he owed no one favors as a result of him having a real distaste for that side of the way that this city, this town, as it's often called, operates. There wasn't a lot of back-scratching involving him, and I think that he felt clean not having to deal with that. And of course, things have changed so much since that one wonders how he would operate in Washington as it's configured today, and I think it's a moment to think about him at that unique moment in American history, picking up on what you were saying a moment ago about this hunger for optimism. Washington, this country, the world is in such a different place, I think, than it was when he came to power.
And even this moment, we just had a incredibly significant election. Donald Trump is coming back into the White House at a time where he does also feel like he has a mandate and he has a trifecta. And we are in a peaceful transfer of power at the moment. This is a moment in time when a lot of adversaries would try to take advantage of the United States. But it's moments like these put on display of actually the core of what America was founded on. You know, you don't see these presidents sitting next to each other that are political rivals to the core. Someone like Kamala Harris sitting in front of President-elect Trump. And there you see President Bill Clinton sitting just behind First Lady Jill Biden. And there you see President-elect Trump, of course. He was having a deep conversation earlier, both chuckling with Obama, but they're right behind Vice President Harris.
And there the doors to the cathedral are opened. That military honor guard standing aside in front of the remains of President Carter. We're waiting for them to be brought into the cathedral here. And we'll kind of duck in and out as we kind of hear audio of that moment. But this is, of course, an incredible ceremony, incredible service. And we haven't talked enough, I don't think, about this cathedral, which occupies such a unique and important place in this city. I'm going to say it's one of the tallest buildings in Washington, D.C., but it's noticeable and has such a storied history, is such a beautiful space. And we were hearing just a moment ago from the cathedral choir, incredible musicians, just a really beautiful place that's so central to kind of the social, religious, and political life of this city.
Yep, and we will see this, people, the National Cathedral are standing as Jimmy Carter will be brought in, and we will get the anthems in procession. We will hear from the Reverend Andrew Young. We're going to hear from a number of individuals, not just that are core to the National Cathedral, but also personal to Jimmy Carter and his faith journey throughout his life?
Andrew Young, of course, just an incredibly important leader in the civil rights movement, of course, a proud Atlantan as well, and a longtime friend of the late president. And, you know, there was a moment when he came to Washington where he brought with him a lot of these close friends and advisors from Georgia, and there was some speculation that might have isolated him or would make it difficult for him to navigate this city. But he really trusted that coterie of friends and advisors that he had from his political life in Georgia as a state senator, as a governor as well. And Andrew Young was chief among them. He made him his ambassador to the United Nations, as we heard from Daniel Freed, the former ambassador, just a few moments ago, gave him a broad remit to do a lot of work on behalf of the administration on foreign policy, especially in Africa. And I look forward to hearing from him as he eulogizes his friend, former colleague as well here during the course of this service, but somebody who was a close and trusted advisor to President Carter during the course of his presidency.
And an early leader in the civil rights movement, and of course a close confidant at one point of Martin Luther King Jr., and then he became active in politics, a congressman from Georgia, and then of course Jimmy Carter really elevated him to that position on not just the national stage, but what was so important about him taking on that role as the U.S. ambassador to the United States in the Carter administration was this is now a new face for America, and really different in terms of how America was projecting itself on the international stage.
I believe we saw the chairman of the Joint Chiefs of Staff walking in, leading this procession of military officials and the remains of the former president coming into the National Cathedral. Just want to pause here for a moment. It's a very somber, poignant scene. You mentioned a moment ago how much of this had been prepared for, put together many years in advance, and we're seeing that on display here. An elaborate program, of course, with the blessing of his family, with all of the trappings of a state funeral as it's kind of been put together here in the United States, but we've talked a lot about the music. The readings today will reflect folks that Jimmy Carter admired, scripture that he appreciated as well. Going to hear that over the course of the day. We were talking about the civil rights movement. I think this is a very fascinating part of his legacy and one that's been highly scrutinized. Growing up where he did, he was not somebody who was active in the civil rights movement, and in his memoirs reflects on his relationship with blacks in the South. He said Plains was majority black. He had a lot of friends who were black, but he's taken a lot of criticism and took a lot of criticism for not being more active in the civil rights movement. You mentioned Martin Luther King Jr. just a moment ago.
I am the resurrection.
Crucial. I'll pause for a moment.
And the life, saith the Lord. He that believeth in me, though he were dead, yet shall he live. And whoever liveth and believeth in me shall never die. I know that my Redeemer lives, and that he shall stand at the latter day upon the earth. And though this body be destroyed, yet shall I see God, whom I shall see for myself, and mine eyes shall behold, and not as a stranger. For none of us liveth to himself, and no man dieth to himself.
Ready, stop. 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 Forward, march. March.
Ace. Ready? Down.
For if we live and if we die unto the Lord.
Ready? Ace. Forward. March.
For none of us liveth to himself, and no man dieth to himself. For if we live unto the Lord, and we die unto the Lord. Whether we live, therefore, or die, we are the Lord's. Blessed are the dead who die in the Lord. Even so saith the Spirit, for they rest from their labors.
The Lord be with you. Let us pray. O God, whose mercies cannot be numbered, accept our prayers on behalf of your servant James, and grant him an entrance into the land of light and joy in the fellowship of your saints. Through Jesus Christ our Lord, who lives and reigns with you and the Holy Spirit, one God, now and forever. Amen.
Joshua Carter, grandson of President Carter, approaching the lectern in the National Cathedral. He, of course, Jeff Carter's son.
My grandfather started teaching Sunday school when he was a midshipman at the Naval Academy. He taught the Bible every Sunday from World War II to COVID. For all my grandfather's travels, he structured his life so that he was home in Plains to teach at Maranatha on Sunday. It was central to his life. Every time I went to church with him, it was packed. The line started before sunrise, and I was always very thankful that I got to walk in with my grandmother. And as soon as we sat down, Sunday school would start. My grandfather always began by asking if anybody had been in his church before. My grandmother and I raised our hands, and almost no one else did. And then my grandfather would poll the congregation, and we'd quickly find out that the church was full of people from all over the country, of all different backgrounds and beliefs. And my grandfather would address the most diverse Sunday school class ever assembled, again. Before he delivered his Bible lesson, my grandfather talked about his week. If he monitored an election, he'd talk about it. If he stopped a conflict, he'd talk about it. If he eliminated a disease from a village or a country, he would talk about it. When my brother Jeremy died, he announced that news in Sunday school. In fact, I remember that my brother died on a Sunday because it was the only time my grandfather was ever late to teach. My grandfather won the Nobel Peace Prize. The Sunday school class learned first. At the end of his Nobel Peace Prize lecture, he stated the most serious and universal problem on our planet is the growing chasm between the richest and poorest people on Earth. For the next 2 decades, as the problem compounded, he returned to this theme with stories from the Bible and stories from today of the richest people in the world using their enormous wealth to buy a nation's poverty. Many of the people that my grandparents helped lived on less than $1 a day. My grandfather spent the entire time I've known him helping those in need. He built houses for people that needed homes. He eliminated diseases in forgotten places. He waged peace anywhere in the world, wherever he saw a chance. He loved people. And whenever he told these stories in Sunday school, he always said he did it for one simple reason. He worshiped the Prince of Peace, and he commanded it. The bedrock of my grandfather's faith comes from the Apostle Paul's letter to the Romans, chapter 8, 1 through 18, 38 and 39. Therefore, there is now no condemnation for those who are in Christ Jesus. Because through Christ Jesus, the law of the Spirit of life set me free from the law of sin and death. For what the law was powerless to do, in that it was weakened by the sinful nature, God did by sending his own Son in the likeness of sinful man to be a sin offering. And so he condemned sin and sinful man, in order that the righteous requirements of the law might be fully met in us, who do not live according to the sinful nature, but according to the Spirit. Those who live according to the sinful nature have their minds set on what that nature desires. But those who live in accordance with the Spirit have their minds set on what the Spirit desires. The mind of sinful man is death, but the mind controlled by the Spirit is life and peace. The sinful mind is hostile to God. It does not submit to God's law, nor can it do so. Those controlled by the sinful nature cannot please God. You, however, are controlled not by the sinful nature, but by the Spirit, if the Spirit of God lives in you. And if anyone does not have the Spirit of Christ, he does not belong to Christ. But if Christ is in you, your body is dead because of sin. Yet your spirit is alive because of righteousness. And if the Spirit of him who raised Jesus from the dead is living in you, he who raised Christ from the dead will also give life to your mortal bodies through his Spirit, who lives in you. Therefore, brothers, we have an obligation. But it is not to the sinful nature to live according to it. For if you live according to the sinful nature, you will die. But if by the Spirit you put to death the misdeeds of the body, you will live. Because those who are led by the Spirit of God are sons of God. For you did not receive a spirit that makes you a slave again to fear, but you received the Spirit of sonship. And by him we cry, Abba, Father. The Spirit himself testifies with our spirit that we are God's children. Now, if we are children, then we are heirs, heirs of God and co-heirs with Christ, if indeed we share in his sufferings in order that we may also share in his glory. I consider that our present sufferings are not worth comparing to the glory that will be revealed in us. For I am convinced that neither death nor life, neither angels nor demons, neither the present nor the future, nor any powers, neither height nor depth, nor anything else in all creation will be able to separate us from the love of God that is in Christ Jesus our Lord. The word of the Lord.
As Joshua Carter, grandson of President Carter, with the first lesson in the state funeral of Jimmy Carter. Up next are tributes from Stephen Ford and Ted Mondale. Stephen Ford, the son of President Gerald Ford, is approaching the lectern now in the National Cathedral. He'll read a eulogy that was written by his father, the former president.
Before I start, the Carter children, my wife and I were sitting several rows behind you, and we were praying for you, and I was humbly reminded